Yeah, good morning, students. How are you? I hope like everyone is doing very well. Okay. Yeah, I'll just get it confirmed once for a while. Like, yeah, whether we are live or not. Just give me 1 minute. Yeah, we'll have some confirmation for sure. Just give me a minute. Yeah, I hope we are live, but still, let me check it for once. Okay. I think I'm live. Yeah. So we have completed a lot of concepts for sure, and the most important. Yeah. Yes. Okay, so yeah, we are live. We are live. Cool. So students, we have completed as like I said, we have completed the most important 5 topics. And students who have not gone through the topics, yeah, I would like you guys to just see the topics for sure. And the most important topic, which is consolidation, which like everybody has a phobia that the things have changed. So we have done the lot of questions for the consolidation part also, but yeah, that is something which I did it in the previous video, which was basically for September 23 onwards, right? So yeah, exactly, things have not changed for you guys also. That will work well. Okay, so without any further delay, today we are going to start with the most important topics, or the most important, not just a topic, the most important part. Without doing that, I would not recommend any of the student to write the paper. And yes, nothing else but yeah, obviously the mock papers. So yes, students, I would want you guys to have a practice on the CBE platform also. So I have also shown like how we are supposed to do the CBE platform, how we are supposed to write the things. And those students who have like taken up the exemptions and who have come after exemptions, I know this paper of SBR mostly becomes the first paper that you all are going to write it in your P level. And if someone has written the skill level papers also, obviously in the professional level, this becomes the first paper, which I want you guys to know. So yes, today I'm going to give you some important tips which you have to write it for sure in your paper, right? Like whenever we are going to start up with the exam, writing the exam, I would want you all students to not just go and read the story what is given in the question, because we know none of the question is like okay optional, like you can leave. No, if every question is important, that is from section A and section B, which we have 4 questions. I want you all to start first with the requirements. Means if I don't read what is the company's background, what is the exhibits and all, if I just start and understand what is the requirement, what they have asked us, my 50% of the mind will start working in which standard they are going to hit us, right? If I can understand what standard they are going to hit us, for example, if somewhere you get the word development, okay, so when it is development, you get a hint, like maybe ma'am, they'll be asking from IS 48. Yes. If I get something about, let's say, goodwill, so your mind will start working in the direction of IFRS 3, right? If something about the contract and the revenue, or maybe the instruments about the bonds, the preference shares is given, my mindset will work about IFRS 9. So all these are small hints which we need to know. Otherwise, what I'll end up doing is I'll read first the whole case, yeah, and I'll then jump up with the requirements. Again, I'll figure out something, and again I'll start reading. Ma'am, a lot of time waste will happen. So yes, so without any further delay, we'll practice the mocks. We'll try to complete it within a shorter span. There is the time which I should take up in the examination cannot be beyond 3 hours and 15 minutes. And whenever we are practicing, yeah, before giving the actual exam, we should plan up accordingly that in the given time frame, we are able to serve whatever the examiner wants us to write. And over here, we are having 2 sections. Section A consists of conso, whereas some portion of financial instruments and all will be there. Section A's second question turns around to be a general scenario, and based on that, we have to analyze how does an ACCA accountant has to use its own ethical judgments and requirements to provide the ethical principles. So that too forms the exact, and always this is the question which is going to come. Students, always. Moving towards section B, it's very simple for those students who pay attention to small standards also. No matter it is IS 40, no matter it is over here IS 16, no matter it's IFRS 15, whatsoever, maybe IS 37 provisions. So the small standards they'll be hitting and asking the questions. So yes, how are we actually going to see the paper and how it is going to come up? So yeah, we'll be having a practice for that. And yeah, without any further delay, let's begin. Okay, I'll just show you. Over here, I have prepared the questions for us. Just give me a minute. Yeah. Over here, we have prepared the mock 1. And yeah, just give me a minute. This is the first question which I have returned it. And yeah, this is basically section A. And I hope it's clearly visible to you guys. I'll just make it 100%. Maybe I'll just think, yeah, it's visible guys. And you know which is this paper? Okay, I'll say you, if you want to have a practice, please note down somewhere. It is mock 1, which we are taking up for SBR International Specimen 2, valid from September 2023 onwards. So yeah, whenever, let's say for example, I want to write it, okay, I'll just measure it things over here. Like what is the section or what are the things which we have to mention it over here, turns around to be this. That is section A over here, which I can just write it from which paper it is for you guys to know. So it's basically SBR International Specimen 2, okay, Specimen 2, valid from September 2023 onwards. Okay, that is basically Specimen 2. Specimen 2 valid from valid from September 2023 onwards. Yeah, cool, easy. Yeah, let's not waste any further time. Yeah, chalo, with these we can just start understanding what they have asked us. And I told you the first question will always be from where? Yeah, students, it is always going to come from the part of consolidation, where the students have a phobia that, ma'am, the things have changed. So what are the things which have gradually changed? It's not the question, it's just the way they have asked. So the concepts has not changed. Like if you see, the concepts have never changed, but it's just the way the questions have been asked is just changed. Yeah. So before I go ahead, let me check just the chats. So yeah, my students have told me that they're gonna join, so I'm just waiting for the chats. I'm here. Yeah, so Sukanya ma'am, okay, yeah. You're there? Yeah, I'm just waiting for the chats basically. Yeah. Okay, yeah, just give me in the chat maybe, ma'am, if you can give me on the WhatsApp also, that will be fine. Yeah, hello Sukanya ma'am. So yeah, without any further delay, I think we can start. Because yeah, ma'am, if you can check now, this is basically from which SBR International Specimen 2, valid from 2023 onwards. Okay, so this is the paper which I have taken up, which will be having 4 questions. So cool, I have just opened up the chats. If you have any doubts, ma'am, you can like anytime message me. Okay, yeah, cool. Okay, so we'll be just starting it up now. Cool. Okay, let's read the first question together. So there is a company, Hill Company is a parent company group. Okay, so Hill Company is a parent company of the group. So basically, if it's a group, that means it will be consisting of parent company, it will be having associates, it will be having joint ventures, or it will be having some subsidiaries. Or okay, yeah, yes ma'am, okay. Yeah, thank you. Okay, yeah. So all the entities in the group have a financial year. Okay, all the companies have a financial year. Okay, and that ends on 30 September 2026. So they have given up the year end on 30 September 2006. So this will be something which will be given in the first para or in the company's background, and then they'll be formulating us with certain exhibits which we have to write it. Okay, so the first exhibit over here, so if you can see 5 things they have given about the exhibits, and that will be always on the left hand side. First, disposal of some dual company. So there is some disposal of some company. That means if I'll be having some company, maybe I would have acquired that company, and later on if I want to sell that company, that is known as the disposal of company. So yeah, disposal of dual company. It provides the information on acquisition of 60% of dual company. Okay, so initially, if you can read, ma'am, it provides 60% dual company on 1st October 2004. So if this much is given, it is for sure that on 1st October 2004, the company is having something more than 50% holdings in this dual company. That means definitely it will be my subsidiary. If it's my subsidiary, I'll be preparing the console also. Okay, for sure. And now what happened? And the subsequent partial disposal Okay, partial disposal has been done on 1st April 2006. So some partial disposal has been done. Partial disposal means not the complete 60% I have not sold, but some portion I have sold. So when is my year getting over? On 30 September 2006. So this is like 1st October 2004. So maybe 2 years prior you have acquired a company 60%. And on 1st April means how many months are pending to get year completed? So my year gets over on 30 September. So April, May, June, July, August and September. So 6 months prior you have sold some portion. So maybe if you sell some portion which is resulting into your holding of less than 50% means sure now it is not your subsidiary. Then what it can be? Ma'am, it can be my associate. Yeah, clear. That is the first portion that they have given. About that they have given a lot of information, and as I always told you, I will never read all the stuff. I first of all go to what the I always go towards the first requirements what they have given us. So what is my first requirement? Using the exhibit 1, explain with suitable calculations how the investment in the doll company over here should be resultant in the CSFs. Okay. So this is my first question for which I am supposed to write my answers. So these are my solutions which I am going to present it over here. So this is my first answer using the first exhibit. Okay, so we have to read what? We have to read the first exhibit and try to answer like how the investment in the company will be dealt in the CSFs. Okay, without any further delay, we can read the first exhibit. So this is my first exhibit. Okay. So disposal of doll company. So we know that on 1st October they have already acquired 60% and now they want to sell off some or the other thing. So on 1st October 20x4 the company has purchased how much? If you can read the question, it is clearly mentioned that on 1st October 20x4, the day on which I purchased 60% of the ordinary shares of the company. At that date, the fair value of the company's identifiable asset was 510. Okay, what if I just copy this as it is and I put it over here because I have to see nothing else. Okay, so this is what I want you guys to do in the examination also. If you don't want to like turn on the pages on and on, you can do like this. You can just paste it over here for the first. Yeah, this becomes your scenario. So that like after you have done with the like with all the concepts, you can delete whatever the question is, so that on and on we don't need to go. Okay. Yeah. So 1st October 20x4, the company has purchased 60% of the ordinary shares of the company. At that date, the fair value of the company's net identifiable asset was 510. Means if you can see the solution, yeah, on the day of purchase. So I can write it. On the day of purchase, I was having a net assets of how much? So my students knows this. I normally pass it with the accounting entry, right? And whenever on the date of purchase, on the date of acquisition, the company is having how much? Yeah, if you can see, the company is having the net assets of how much? Yeah, the net assets were there of $510 million. Cool. Yeah. The NCI at the date was 215. Why? Because guys, I'm having only 60% control. Cool. And what will be the remaining? So yeah, basically 40% will be whose? 40% control will be of whose? Will be basically for NCI, non-controlling interest. And they have already valued the NCI at what, guys? So they have valued the NCI at 215 for sure. Okay, so they have already presented it with the NCI for 215. So okay, my balance of NCI will be $215. Oh my god, I don't know where it was actually eventually stopped. I just need to know for once. Yeah, just let me know it for once. Yeah, I was about writing and something went on break. Let me just check it for once. Where did it stop? will always be from there. Just give me 1 minute. Yeah, so I was about flipping now, so it eventually went off. Yeah, no worries, no worries, no worries. So I was saying that it is $215. Yeah, it's there. Yeah, so I have to on and on see whether yeah it's there or not. Okay, $215 millions. Yeah, it's very simple. And in the question, have they provided anything else? If you can see the over here, goodwill on the date of acquisition also was given $50. See, we are not doing anything more. We are just formulating what they have given up in the question, and then we'll go ahead with the concepts. Okay, so it's given goodwill at the rate of $50 millions. Okay. Oh my god, I don't know where it was. Yeah. Cool. Okay. So over here, students, at the date of acquisition, am I supposed to do anything? Like, am I supposed to pass any account? Yeah. So on the date of acquisition, what I normally do, I take the company. So what if it is more than 50%? I want my financial statements. I want their financial statements attached, so that we make the consolidation. So what I would have passed on the day one, I would have taken up the net assets debit, and I would have paid something, right? And we know when I'm paying something, I pay only for my share, only for the rate of 60%. And what will be the balance? That balance of credit will be the NCI's balance. Yeah, this is something we all know, right? For example, if this stuff is given in the question, if this stuff is already given in the question, yeah. Now what am I supposed to present it? Yeah. So over here, my first entry on the date of acquisition turns around to be what, guys? Yes. So I'll just go ahead and read. Okay, some net assets are given. Can I write like this? Net assets account debit. Yes. Yeah. How much it will be? Will it be like 510? Obviously, yes. If I'm having any sort of goodwill, can I do this goodwill account debit? Yeah, obviously I can put goodwill account also debit. How much? They have given 50. To something I have paid. Whether they have given how much I have paid? No. To purchase consideration. This is what I normally say my students, they know that. And two, the balance of NCI. So purchase consideration which I have to pay will be like 60%, and to NCI balance which they have given 40% already as the opening balance turns around to be 215 for sure. If this much is given with us, can I then understand what will be the balance? Okay, let me just figure it out. Anything else is given in the question? Let me see. On 1st April, so okay, on 1st April when the date of disposal is there, so nothing else is provided in the question. So okay, with these, can anyone please tell me what will be the amount of the purchase consideration which the company would have given? Can I take the remaining amount? Like my total debit balance is 510 plus 50, which comes up to be 560. Yeah, minus the balance of NCI, minus 250, which comes to basically 345 is your closing balance. Agreed? So why is it so? On the date when you purchase something, if you're paying something extra, that is goodwill. And if they have already given you the amount, it's okay. We can just carry on with the purchase consideration, which is 345 as your remaining balance amount. Okay, this is your balance amount. This is your balance figure, balancing figure. Yeah, this is what we could make it up. Sure. So this is just what I have interpreted it. I have did nothing. I have did nothing. It's just like I'm reading the first para and trying to formulate what the question is. So what they have given on 1st April. Okay, on the date on which I need to make the disposal, on 1st April 2026, the company disposed of 20%. Now, the company was initially having 60% and out of which 20% they disposed. What are we left over with? Yeah, we are left over with 40%. If it's 40%, what am I for that company? Yeah, it is my associate, right? Something lesser than 50%, but more than 20% is my associate. So now that other company, for Hill Company, a Hill Company has to record the Doyle Company as its associate. So if it's associate, do I now need to make a consolidation? No, not at all. Now consolidation will not come into picture. Then what will come into picture? Yeah, ma'am, the associate will come and the associate's accounting entries, we are going to pass it, that's all. Okay. Now, but if this is not going to come, the accounting associates is fine. But if I want to remove this out, how will I remove? Definitely, if you sell 20%, you will get something. What will you get? Yeah, ma'am, I'll get cash. But now, am I able to book net assets? Am I able to book NCI? Why will I book? Because I don't prepare consolidation. Then all the stuff has to be removed out from my balance sheet. Means now I am supposed to de-recognize this all stuff. Okay, so my first thing will be to de-recognize this. Yes. So on 1st April 2006, the company disposed of 20% holding in the shares of Doll Company for cash consideration of 140. Okay, so I'll just write it up. I'll just copy things. Okay, losing the control. Okay, I'm just trying to copy it. Okay, yeah, just the second point what I feel over here is this. Means I get a cash consideration of 140 after selling what? After selling or disposing of 20%, resulting how much? Resulting in only 40% left over with the company. Agree? Yes. Nothing else. Simple. I receive 140. Okay. At that date, the net assets of the company, excluding goodwill, okay, they have not taken goodwill, is 590. Okay, they have not taken goodwill. So on the day one, I got net assets. In the year end, I got net assets. And if there is any change, what it will affect, ma'am? Obviously, it is going to affect what? It is going to affect the balance of NCI also. Why? Because NCI will definitely have some balance of the this net assets. So what I have to do it, I have to remove this net asset now. So now this net assets of 590, I have to remove it. So only net assets will I remove. And net assets also you have to remove it. You have to remove goodwill also, because now you cannot record it. You have to even remove this 40% NCI. Yeah. So what things first I have to remove it? I have to remove first the net assets. And the net assets fair value is given as on the date of removal is 590. Goodwill also you guys are going to remove it. So goodwill's value is nothing changed. So definitely goodwill will be removed at 50. But at what will amount I'll remove my NCI? Can I remove my amount of NCI at 205? So you'll say no ma'am, something more they would have got. Definitely something on day one, something on year end. If it is increased for NCI, they would have got something more balance. Like how much they would have got more balance? So yeah, my net assets was 510. Now if it is 590, the extra 80 they would have got their share of profits. Yeah, so 215 will be there. Plus what? Plus guys, they will be also getting 590 minus 510, which results into 80. Yeah, but what's their share, guys? And their share turns around to be like initially how much it was it 40%? Yeah, initially it was 40%, which results into how much, guys? You have calcies. Can you do 80 into 40%? Do you get 32? Yeah, 80 into 40%, do you get 32, which is equal to 32? So can you say me what will be the balance of NCI? So yeah, the balance of NCI turns around to be how much? 215 plus 32, which results into what? Which results into, yes, 215 plus 32. Is it $247? Yeah. Is it $247 million? Yes, ma'am. Yeah. Are you getting it? Now, Sukanya ma'am, I'm not going fast now. I'm just waiting. I'll just, yeah, I'm just on. So like we need to understand this, because now at this point of time, yeah, at this time I have not taken up consolidation, right, in the revision series. So I'm feeling very much like I'm feeling something incomplete, but I know obviously it's there in the YouTube. So double the time if I take up the revision, it will be like not so much of worth. Like repeating the same questions, right? Instead of that, we can take up more. Yeah. So over here, no ma'am. Okay. So basically I'm having 3 participants. So I just want others also. I don't know who is there next, because I just cannot view them. So yeah, if there is any doubts, yeah, I would want for sure. Okay. Okay. Yeah. No. Okay. Yeah, ma'am. Okay. I'm just getting a chats. So I'm on with this. I'm feeling good. Okay. So what's up next? Okay. 247 is done. Yeah. Cool. So this is something what they have presented. I have just returned it. Nothing else, right? Now, if this is done, Am I supposed to pass the entry? Yeah, ma'am, you have to remove it out, right? You have to remove it out. If you want to remove it out, what is debit? What will I get? I'll get a cash of 140, right? So what I'll write it over here. I'll get a cash. So cash accounts will be debit by 140. Will you get? Yes. Now, do you have something in that company? Yeah, I have 40% stake. That is my asset, right? But which asset? Like it's an investment in associate. So yeah, maybe I'll be having something like investments in associate, right? Yeah, investment in associate will also be there. Means my financial statement, I'll be writing it like that way, debit. But actually I don't know the value. For example, okay, wait. We'll get to know that also. Okay, I'll book it like that way. I have not written anything stuff over here. Then, will I have anything like debit thing? What I'll get it? Ma'am, no. Now you have to try to remove things. You have to remove things. Okay, if I remove things, I need to know what initially I have debited it and what I have credited it. In the previous time, you were having a credit balance of NCI, like in your financial statements. You remember in the equity portion I have written. So that was credit. Now if you don't you think you have to debit it? Yes. So now my NCI needs to be debited it. So now my NCI is to be debited it. By what amount I'll NCI debit? I'll NCI my debit by what amount? Yes. It will not be 215. We got the new balance of NCI 247. Yes. Now the net assets will go. What are the net assets? Is there anything changed? Yes, my net assets are now basically 590. And I was having a goodwill also. That also I don't want. So 2 goodwill. I'll remove it out and I'll get cash for that. That was 50. Guys, after this, can you tell me, did I got these investments? Ma'am, no, not yet. So what is the investment? Let me figure it out. So what have they given, students? From 1st April 2026, okay, the date on which I have disposed it, the company has the ability to appoint 2 of the 6 members. 2 of the 6 members does not give you the majority that you will be having. Okay, means you have some influence, maybe not that much also. Okay. The company's board of directors, the fair value of 40% holding is 300. Okay, cool. See, they have given us. Okay. So this profit, they have reported the profit at year end. Year end things I will not record on day 1. No, it's on 1st April. So 1st April, my 40% share is 300 millions. So it's cool. I can write it over here. 300 associate opening is 300. Why? Simple, ma'am. Today's value. If I'm having this, is it a profit or loss? Means what are the things? Okay. Nandana ma'am is there. Okay. I'm there, but I'm attending with the work, so I'm not able to. Oh my god, thank you ma'am so much. But if you're taking up the time to see, it's very good. Yeah, thank you so much. Yeah, cool. So ma'am, if you have any doubts, we can just go ahead. You can say. Okay. So yeah, over here now, students, if this is a stuff which is given, so can I get to know what am I getting it and what is my going out? So I am getting 140 cash for that 60%, for that 20% sales. Ma'am, I am also having like 300 for my valuation of 40%, and my NCI will go of 247. So 687 is what I get it in the debit balance. What are the credits? My credits is 590 and 50. So I am getting a gain. Yeah, I am getting a gain. I have more gain. So that is a credit to what? Now this is my 2 gain. Okay, 2. I'll write it profit on disposal. Yes, students, my profit on disposal turns around to be 47. Okay, did you understood this? Now this is very important. Over here we get good marks if we calculate this much. Yeah, if you see in the answers, the answer will be written different way. Okay, but I am okay with to write this, because if I record in this fashion, if I write this way, or maybe you can interpret these things, you will get full marks. So this is what I have just initially tried to just make you understand. Now how will I frame the answer? Okay, so frame the answer now, students. I tried first of all writing it all stuffs, but then I thought like why to write each and everything where I can just portray things to you at an easy manner. So I thought of let me portray things. So I'll just frame it for a answer. How will I portray? Okay, how will I start formulating the answer? So students, just for us to do more questions, I have taken up this way. So this is what I have to write it first. The company, the shares of the company, yeah, this is the answer you have to write it, okay. The shares of the company in the Heal company losing control over Doyle. Why? Because if I'm having something lesser than 50%, I will not be having control. So what I have to give away? Ma'am, the NCI, the net assets and the NCI, the goodwill. of the company must be derecognized from the console position. And the difference of the proceed over here, what I got was the amount of 47 which I am getting as a profit is calculated how? Did I got 47's profit? It's calculated how? So they have shown in this fashion. You can also show in this fashion, whatever you are more comfortable with. It's just whatever the plus and minus they have did it directly. I'll just try to make it very big so that it is clearly visible for you guys. Yeah, is it visible? So whenever I'm selling it, I get a cash of 140. Yeah, for sure. 40% value, that is what it creates an associate for me is 300. So totally in hand I get 440. But what goes? Goodwill goes away, fair value of the net assets goes away. So this is the credits, and this is what at the acquisition my NCI's position was this, and by the end I get the difference of the assets also, fair value, which was 32. So I get NCI's balance of 247. See, instead of doing this and getting a profit of 47, if I show it that way. So first my NCI's balance was 215, opening balance, and this was the changes in the fair value. I got 80's gain. So basically my NCI was 247. You getting NCI of 247? So that is also you have to debit it. So all these stuffs are added, all these stuffs are deducted. So basically you get a profits of 47. Did you understood it? Yes or no? So okay, by writing this, it will not be enough. By what they have framed as the question, for we need to read that. So what have they asked us in the question, which is worth very good marks? Yeah, which is worth like 7 marks. So using the exhibit 1, explain with suitable calculations. I just did suitable calculations. Now I need to explain. If it is gone, like if I have just like de-invested something and I have de-recognized things, so definitely I'll not be in the position to have a control, but obviously I'll be having some significant influence, because now it is not formulating your what I can say your subsidiary, but obviously it is now your associate holding 20 to 50%, which results into what? After disposal, now I'll be having only 40%, and I am having an ability to appoint how much? 6 members. If I'm having 6 out of 6, I'll have just 2 members. So that means now it is my associate. So maybe I'll be in the position to account it as per IS 28. Yes, there is associates, like accounting for associates and joint ventures. So all the stuff also I have to write it. Then if possible, you guys know, so you can elaborate it. You can write the definition of whatever the associates is, like if you have the significant influence, you can write like that. After disposal, now I'll be having only 40%. For sure, that ability I'll be having to appoint only 2 out of 6 members, which means maybe I'll be having some significant influence. So which standard hits? So IS 28 hits. That is what? Investments in associates and joint venture, which states that an associate is having what, guys? They'll not be having the control. Associates do not have control, but what they have? Significant influences, the power to direct something, right? So how will I present that? So associates over here states that an associate is an entity which has a power, which is a power of doing what? Taking up the relevant decisions. Yeah, taking up the relevant decisions. So yeah, I can just record things over here, and I would like to frame the answer in such a fashion. Okay, we'll just read it. I'll just paste it over here because I want I don't want to waste so much of time. So investments in associate and joint venture over here takes up that way. So if required, I can present my IS 28 also. So if it's IS 28, how will I record that? If you're making an investment in associate, what do you record it? In my financial position, I would like to record it as investments in associates at a cost. So what is the amount of investment in associates? Is there anything fair value given up in the question? Yes, it was given. If you remember, was it 300? See, if they're asking something from exhibit 1, try to clearly elaborate them. What is there in the exhibit 1? Yeah, this point. So 6 members, you have to write it. 40% is a holding, and I am holding it for 300 millions. And by the year end, if that company in which I have a stake of 40%, if the guys are earning anything, I'll get my share of profits. Simple. So they are earning 123 million. Cool. Will you get your percentage of 40? Yeah, obviously will I get. But from which date will you get? For whole year? No. The date on which you have disposed of your subsidiary into your associate, the day on which you have converted it. Okay, simple. Yeah, we can go ahead with that also. Simple. Yeah, I'll just present it over here. So yeah, this is 300. Okay, if you want I can just copy it. So maybe again I don't want to come up. Yeah. Okay. Yeah, for this question. Okay, I'll just paste it over here, the question which is framed. So yeah, definitely my investment in associate is 300. Along with that, I'm getting some profits also. Profits on 30 September, and on which date I have started being an associate on 1st April. So how many months are there, ma'am? So yeah, is it 6 months? So I'll get 6 months profit also. 6 months share in the profit also, in the profit of the associate. So how much it will be? So if you check on, is it like that? 123 millions into 40% into 6 by 12 months. Yeah. So if you take up, what is the value? Please do it. 123 into 40% into 6 by 12. Are you getting something around 24.6? Yeah. So it's 24.6. So if you see, what will be your investment looking at the year end? So yeah, if I check the total, my investment will be at which? My investment in the closing date will be how much? If you check, it is gonna be 324.6 only. So $324.6 millions. Cool, easy. So yeah, that is what I have calculated it, and the same is to be interpreted in the theory portion. So yeah, why not to waste it? Yeah, just I'll paste it over here. So investment in associates and joint ventures states that an associate is an entity over which the investor has what, guys? The significant control. Like significant influence means I can take up the decision, I can participate in the decision, but it's not something like without my control you cannot work. No, I just have some significant influence, that's all. Okay, yeah, cool. Significant influence is presumed when the investor has a shareholdings between what? 20 to 50%. Yes. Over here, how did I had that significant influence? Yeah, I was allotting now. Okay, out of 6 members you can appoint 2. So write that way. So representation of the board of the directors can be a significant influences. Therefore, the remaining 40% which will be accounted as an associate. Okay. It will be initially recognized at the day 1. It will be recognized at 300 millions at an equity method. And what about the year end? Year end, I get the associates share of profits, which is 24.6. How it is calculated? 123 into 6 by 12 into 40%, which comes up, and at the year end, at the reporting period, yeah, my investment at the reporting period. The reporting period means at the year end. Okay, at the reporting period turns around to be how much, guys? Turns around to be 324.6 millions. Cool, easy. Yeah. So this is how I completed my first part of the question. Clear? Which easily fetched me 7 marks. I hope it's clear. See, students, it was not difficult. To be very frank, it's not difficult. The exhibit 1 is clear. Yeah, the exhibit 1 is very clear. So if time permits, I just delete all this stuff. So yeah, we are good with the solutions only. Yeah, so this is the way I present my first answer to get the superb marks. Okay. So my examiner should know, okay, Baba, we know the things, we know the concepts, right? Going ahead with the second question. Okay, this is my second question which they have formulated it. I'll just copy it and paste it towards the downside. Yeah. Okay, this is my second question. Now, this is what people have a phobia. Okay, ma'am, things have changed. Yeah, Sukanya ma'am, yes ma'am, understood. Okay, thank you. Yeah, thank you. Yeah, so ma'am, over here now, I'm telling you, yeah, like maybe now, things happens, huh? You guys write the chat. Yeah, you guys give me the message on chat, and it comes up to me thoda sa late. So आपको लगेगा कि what I'm doing here and what I'm seeing in the mobile, yeah, it comes a bit late. So yeah, maybe you just have to adjust some frequency. Okay, using the pre-populated spreadsheet responses. Okay, so pre-populated spreadsheet, we know, yeah, things have been changed. So these things have been changed. What are we doing? We have to check the exhibit 1 and 2 and update the draft extract of the console of cash flows. So when I just speak up with the cash flows, what's cash flows? What's cash flow statement? So yeah, we know, ma'am, it's been measured in 3 parts. 1, Yeah, what are the parts? Yeah, it's been divided into part 1. Yeah, second part and third part for sure. So what's that? Yeah, we have the operating cash flows. Yeah, operating, in which, for example, the company is engaged into some business, and relating to that business, if there are some inflows and outflows, that is known as operating cash flows. Yeah. Then second we have is what? It's the, yeah, it's not financing, it's investing. Yeah. So people will mix up over here, they'll put it financing. No, it's investing means, for example, if the company is having some extra funds and they want to like purchase some asset, maybe they want to some dispose some asset, or etc etc. That is their investing activities. Last but not the least is basically their financing activity. So what's financing? If the company does not have so much of finance, they want to get finance, maybe by issue of debentures, maybe by issue of equities, etc etc. So that is their financing activities. So some wrong information will definitely be given to us, and we are at a position to make it correct. So yeah, without any further delay, we can just make it correct. Yeah. So what is the pre-populated spreadsheet they have given? But they have written in the question, you have to see 2 exhibits. Which exhibit? Please give the response from exhibit 1, which we read it right now, and exhibit 2, and update. So when it is updation now, students, they will give you the things in your spreadsheet. So figures will be given, we have to just adjust the things, add on or less on. And the draft extract of the financial statements or console we have to prepare of the cash flow statements, and to adjust for disposal of by subsidiary, and to amend for any errors and changes. Okay, if there are any errors and changes or omission. So I know I told you on the day 1 also when I was explaining, when it's the second question about the spreadsheet something, so they'll be missing on some figures. So maybe IS 8 you have to hit on. So which policy did they make? Or they have some errors or omissions. So changes in accounting policies, estimates and errors. So yeah, over here they can influence that. So yeah, without any further delay, we'll just go ahead with the second exhibits. So yeah, if you want, I can just copy it over here. Okay. Yeah, so if you read the second exhibit, what it is. See, first exhibit is already done. They have given over here. Further information about the company is given. The group financial controller has produced draft extract of console of what my cash flows, which has not yet considered in the impact of disposal. Achha, when they were doing the disposal of the company, they have not considered the stuffs. Okay. So there are some errors also, and all of the consolidated financial statements have been correctly prepared. Okay. The draft extract has been included in the spreadsheet response. Okay. What are the draft extract? They have just written it. So we'll consider that, and we'll consider this stuff also. So they are mad people. They have not considered this stuffs. What is that? The carrying amount of the net assets on the day 1. Oh, what's this first table? On the date of disposal. On the date of disposal, let's say in my books, the carrying amount of the assets which I had was, means the Doyle company. Okay, the Doyle company. Yeah, the carrying amount of that company in which I have disposed of was having a PPE. Okay, so yes ma'am, was having a PPE of 311.9. Cool. Was having an inventories worth of 200.5. Okay. Trade receivables were 181.3. Cash and cash equivalents and trade payables are given with minus. And we all know that inventories, trade receivables, cash and cash equivalents, everything is what? Yes, it's an operating activity in which the company is engaged in the business. So all this stuff comes under that. But when I say, if I have, let's say, purchased some PPE, if I have sold something, if I have got some sale because of selling some or the other thing, if I'm getting something stuff, so that is known as my inflow and outflow. Okay, that is for my investing activities. Or if I'm doing something on my normal thing, so that is basically my operating activities. Yeah, so cool. With this overview, we can just read the further questions. So please try to read it clearly. The statement of cash flow figures for inventories, trade and receivables and trade payables and property, plant and equipment has been calculated by considering only the movement between the position of 30 September 25 till 30 September 26. So like for the whole year they have considered it. Okay. The company, the Hill company means the parent company, which was initially parent, now it is having the associate relationship. Over here, the Hill company, our company, have exchanged the PPT with have exchanged the PPE with one of its supplier on 1st November 20x5. So my year starts from 30 September 2005. So yeah, that will come into picture. And what they have got, it is estimated that the fair value of both the asset exchanged was 50 millions. So they have exchanged two things, was 50 millions, although the carrying amount of the asset transferred by Hill was 45 on the rate of transfer. Means for 45, your asset was of 45, means my company's asset was of 45, and if I exchange it for 50, don't you think am I having any sort of profits? Yeah, ma'am, I'm having a profit. It's clear. 5 millions is my profit. So your asset went for 45, you purchase another asset for 50. Okay, yeah, clear. There is some difference. Okay. There was no other disposal of non-current assets there was no other disposal of the non-current assets by the group during the year of transfer other than the disposal. Okay. So I just disposed it, nothing else was a change. The group also purchased some PPE during the year for cash. Okay, so purchase for cash. Okay, so maybe some cash would have been gone out. So yeah, we need to see. And this thing is a hint, something for cash. Maybe this could be the balance, what I get it in the PPE statement. I'll explain you, don't worry. And the debris is being charged for the year end was this much. Cool. And we know one thing, depreciation. Is it a cash expenditure? No, my depreciation is a non-cash expenditure. So if it was being deducted, so we have to add back. Depreciation is not a cash expenditure. Yeah. Simple. So cash flow statements, something are given. Now, read the pre-populated spreadsheets. Okay. The draft extract has been replicated over here. Yeah, in this spreadsheet it will be given. The draft statement is given for which year? 30 September 20x6. This is the year end. Okay, this is the statement they have given it. Try to understand it. Profit before taxation is 158.1581.7. Okay, this is before taxation. Am I supposed to do anything else? Yes. Am I supposed to add something? Yeah. Can I add over here? Can I add over here anything like after the profit before tax? So yeah, ma'am, maybe depreciation I would have already deducted it. We have to add it. Yes. There are certain adjustments. Acha, year end, your inventory is increased by 842. Okay, year end your inventory is increased by 842. Like there is an increase. So day one also I'll be having some inventory. Year end also I can add it. There is an increase in payable. Means over here, if you can see in the current year end they have given that your receivables are 379 and day one also maybe you can add it. Increase in your payables 224. So something you have to pay. Your payable was 224. Something on day one also will be there. So maybe you have to add it. So is that what? Yeah, ma'am, it's something about the operating activities. It's my normal operating activities. Okay. They have given about some interest paid and the income taxes paid also. So okay, by the year end this is my expenditure, which 126.8 and 424. Okay, normal. So net cash they have given up of the operating activities also. Fine. They have also given at the year end the PPE balance of 733. Okay, they have given something of 733. Cool. Now they have given this, which becomes important. Extracts from the console is given like on the day one of the year starts. My property, plant and equipment was having this measure of 4219. And by the end of the year, it turns around to be 4953. So maybe whatever sale purchase I have done in the current year, you remember something I have disposed of, something I have purchased it of my subsidiary also I have disposed of some of the other things. So okay, I have to adjust that. So this is just the background of the study which I have made it. Now we are just going to prepare the statement. Okay, maybe this is to be prepared in the Excel sheet. So if I want, I can just formulate an Excel sheet over here. So yeah, I know it will be on and on, coming and going will be difficult. So yeah, I'll just take 1 minute for you all. Just open up one Excel sheet. Okay. I know it's very difficult to like come and go up that way, but it will hardly take a minute. Yeah, I'll just try to copy. I'll just show you this also stuffs. If you want, I can just show that also. Wait. I'll do one more thing. I can just take all this stuff so that it will be clearly visible for you all. So we will not come up again and again. Just give me a minute. Yeah. Yeah, by the meantime, you can just read the question also, huh? It is anyway, which was very important. Yeah. Okay, so now let me open up the Excel. I have tried to copy all the stuffs which is presented in the question. Yeah, I have copied all the things. So if you write in that, it will be very easy. Along with that, now I have taken up all the exhibits also. So it will be easy for us to just go ahead and read the things. Okay, yeah. So I think the Excel is visible. I'll just need to get it confirmed once. Wait, I'll just check it. It's not visible. Yeah, ma'am, is it visible? Yeah, I think it's visible. Yeah, it's pretty cool. Yeah, it's pretty visible. The visibility is there. Just let me check it for once. Position, yeah. Eh, it will begin soon. Why it is will begin soon? Okay, yeah. Yeah, I think it's clearly visible. Yes, ma'am. Yeah. Yeah, because some things happens very often. Okay, yeah, it's clearly visible. It's clearly visible. Okay, so in these it will be better. Like I have taken up whatever the stuffs they have given us in the Excel printed thing, and yeah, this is what. Okay, I'll just try to reduce it so that to the max extent. And these are certain exhibit 1. This is my exhibit 2. Yeah, which I have also taken up so that we don't need to see it again. Okay, yeah, cool. And the final stuff is given. Okay, cool. Okay. So over here, for the first and the foremost thing, what I have to prepare is CSF's main. We will start with the stuff. Okay, so we have to answer it in this format only. Okay, we have to answer it in this format only. Whatever is given over here, we have to do some additions and deletions. We have to do over here only certain additions. Over here only some additions and deletions we have to do it. Okay, cool. So I'll just start doing this stuff. For the first, what they have given us in the question, we need to go ahead and read. Okay, why is it not coming up? Yeah. First and the foremost thing over here, we will read it. The group financial controller has made all those things considered, and they have not yet considered the impact of disposal of the company. So there are certain errors which we have to take it. Considering the second exhibit, the carrying amount of the net assets on 1st April 2006 are this. All those are my day one's balance. All are the day one balance, and all over here, if you can see over here, if you see my inventories, my trade receivables, my payables, and all are at the year end balance. So this is basically for year end. So what are we supposed to take it? Maybe we have to add something. So whatever these things are known as, which are day-to-day workings, are known as working capital. Yeah, we know that. So what I can do, I can just do working capital changes. So working capital things, I need to make a change. So what am I going to do? Okay, if you see increase in inventory, your closing over here is 842. Okay, so when I check this, students, we need to know, okay, whatever the extracts are given basically for the year end. Okay, my extracts are always given at the year end. So this 842 over here is presented, and what is this balance for inventories? For inventories it is 200.5. So if you take 200.5 and if you add over here minus 842, so if you do it, it's like minus 200.5. What is your balance that you get, guys? What's the balance that you get? So yeah, over here it's very simple to get the balance. There is over here you can do minus 842. Okay, minus 842.5 minus 200.5. Are you getting the balance of 1043? Yes. It's something of round off, but it's okay. I will make everything bold over here. So this is my closing balance. Cool? Yes. What's up next? What's up next? They have given trade receivables at the end is 379. Means your receivable in the books of accounts at the end is 300 and your opening balance is 300, some X amount. So don't you think your balance will be changed in the current year? Yeah, maybe the cash. So yeah, let's see. Over here it's minus that much. So my trade receivables are 181.3. Okay, like over here the balance is 181 minus 181.3. If you take up the total, what's that? Minus 379.2 minus 181.3. Is it 560.5? Yes, it's 560.5. Cool. What's up next? The trade payables by the end are 224. Means 224 is the amount that you all have to pay. And what's my opening trading balance? Means this much from the day one it was pending to pay, and this is the closing. So maybe for the whole year, what will be the situation? What will be the situation for the whole year? Maybe X addition, nah. Things will be definitely added. So how much it is added? Ma'am, it's over here minus 124.4. 124.6. If it's over here minus 124. So we have to add this as 124.6. Are you getting it? Are you getting it? Means in the question, if it is minus 124.6, means on the day one, that is something it's your payable. And by the year end also, if you have to pay so much which is pending, so don't you think your payables will be increased? Yes. What I have to pay will obviously be increased. So 224.2 plus 124.6. Yeah, this is something which I know that everybody knows this concepts obviously, because this is something which is very easy to understand. So your receivables and the inventory at the day one is this, year end is this. If it's negative, just need to be added and to make the total. Over here, if I'm having some payables and some receivables. So payables, if I'm having a negative thing on the day one, means this much is payable and still this much is remaining, we have to make it a total. And over here, if it's a receivable, even that works well. So at least 3 things over here, I have completed it over here. So all the stuffs are done. Now what's that? Cash and cash equivalent. Okay, that is something on the year end I have to see. So this is my day one's balance, which is 20.9. Okay, there is something which is pending. I'm having a property, plant and equipment also. So okay, this is the first thing which we did it. And in that, ma'am, we have to even see for this. In the cash flow statements, so what have they presented over here in the question? Yeah, the statement of cash flow figures for the inventory, trades, receivables and all have been calculated for the moment of the whole year. Okay, these are the stuffs which we have calculated for the whole year. So I have to see, achha, this is the balance at the day one and this is the balance for the whole year. There is still a negative figure. So we adjusted the opening and we got for the year. We got it for the year. This is something which we did it. Up next, what they have given in the question? Yeah. The company exchanged the property, plant and equipment. Okay. They exchanged some property, plant and equipment. And the fair value of the asset which is given is 50. Okay. The asset, okay, just read it. It is estimated that the value which is exchanged was same. But if I'm getting an asset is worth 50. And what carrying amount of asset which I gave was 45. So am I not getting 5's profit? Yeah, obviously. So how will I try to account? Is there anything else in the PPE given in the question? If you can check in the question, over here, there is nothing over here, but over here the cash flow is given 733. Okay, so I will have to adjust something with my PPE. And if you see in the property, plant and equipment, I normally get a depre also. I get a depreciation also. So what's my depreciation at the year end? Is it 775.1 depreciation? Yes, 775.1. and this is my balance on the day 1 1st April. So 311.9. Can I make a working note for my PPE? Obviously I can make a working note for my property, plant and equipment, a working note for my property, plant and equipments, PPE. So I have to take the balance, but is it that much balance? No. If you can see, students, try to understand this, try to understand this. This further information is for whom? This is basically the extract for the net assets of only my associate, now which is my associate. Do I have any balance of my own? Yeah, do I have any balance of my own? Yes. This is the balance of the Hill company, my company. They have given the PPE on day 1 and PPE at the year end. Okay. The opening balance of my asset is 4219 and closing balance is 49530. Okay, so I'll just consider it as my opening balance, which is given in the question, turns around to be 4219.2, and my closing balance is over here, which is given at the rate of, my closing balance is provided at the rate of what? 4953.0. Okay. Now, if you understand this, you will get to know more. If you are having any balance in the sector which you have disposed, can you take that balance? Means you have already disposed some asset. Now, will that be your asset? I have already disposed that company, means that initially was my net assets prior. But now if I have disposed by subsidiary and now if it is an associate, so I will not consider that, I will never consider. So this, do you think should I consider it? Do you think should I consider that net assets balance of that other company? I will not consider it. Similarly over here also I will not consider it. Yeah. So I just reduced it. Cool. So I will not consider the PPE 311.9. I will not consider the 311.9. Okay. So that is what you have to reduce it. Because I have disposed it. Agreed? Because you have disposed it, you have to just reduce it. So what I have to write? PPE, if I have made a disposal. So it's made on disposal. So yeah, that asset is not yours now. So minus 311.9. Was I having any depreciation? Yes, ma'am. We were having a depreciation also. So if you remember, my depreciation balance was how much? 775.1. Yeah, so it's 775.1 was my depreciation balance. Now what I did, I exchanged some asset. My asset gone. What is my giving asset? Means the went of asset which I just exchanged it. So exchanged asset which I gave was basically 45, right? So it went 45. And in return, I now have purchased an asset. I exchanged or purchased or exchanged the asset worth how much? Yeah, $50. That was there in the question. Everything whatever they have presented, I just wrote it over here. I just wrote it. Now what's the balance which I should initially get? Should I get initially this much? This minus this is not my asset now. This is my reduction in the depreciation. This is the asset which I disposed it, and this is the asset which I purchased it. So initially guys, my balance should be this much at the closing. But now if it is more, why is it more? So one line they would have given in the question, like the group of the company has acquired some assets. Okay, so if they have purchased or acquired any other assets, so definitely that will be the difference. So what's the difference? God bless me. Sorry. So this is the difference. 1815.8 is the difference. So this is what, it's just the difference, which means cash additions purchase. So cash additional purchases which we have made it, and that is nothing other than the balancing figure. Yeah, this is nothing other than the balancing figure. Agreed? Yeah. So that turns around to be 1815. You have to either add it or subtract it. Tell me. You'll be having some balance at the year end. Okay, 1815. Okay, if it's 18, is it only 1815? Yeah. If it's 1815, what should I do? Should I add it or should I subtract it? Okay. Out of that, can I say 775.5 is my depre? Yeah. It's my depreciation. Cool. So this becomes my year end balance. So okay, if this is my year end balance, how should I add it? So can you please see what is the balance given in the question? Acha, my balance over here needs to be 1815, which we eventually presented. But in the cash flow statements from investing activities, they have misstated. So means you guys have made it wrong. How much wrong? You have just returned 730. No, ma'am, it's not that. Your actual balance should come up how much? Your actual balance should be basically 1815.8. So yeah, it's a deduction. So 1815.8 should be your balance. So how much you have to deduct it more? So yeah, you have to deduct it more. How much? To deduct it more, 1082. You have to deduct it because it's a negative. So yeah, it's a negative because I have purchased it. So it's a negative cash flow. Agreed? Yes. So you have to deduct it more. Are you getting it? What I'm trying to say? Yeah. So this is what they have created. But eventually this should not be there. You have to adjust any changes if they have made on the date. Yeah. So I have adjusted it for the first. Is there anything else I have to adjust it? Yes. If you can see this, interest paid. Have they given any transaction for interest paid? No, ma'am, nothing. So I can take as it is 126.8 and I can take minus 424.6. I can take as it is. Over here, ma'am, this is a profit before taxation is 1581. Okay, that maybe I can take as it is. This is my income, like 1581.7. But definitely I would have not considered what depreciation. I would have considered as the deduction, but I know depreciation can never be reduced. Agreed? Depreciation can never be reduced. Why? It's a non-cash expenditure. So what I have to do? I have to do over here, add back depreciation. Yes, depreciation. What's the depreciation value? Yeah, it was 775.1, right? So ma'am, we have to add it back over here, 775.1 as your depreciation. Agreed? Everything clear? Yeah. Is there anything else you have earned it in the current year? Yes. When you disposed of, you have to read the exhibit 1 also. So yeah, all the stuffs which is presented, I have considered it. Yeah. From the second point also I considered it. Over here now, people will get confused here. Seriously, they'll get confused here. The draft exhibits or the extracts have been included over here. The carrying assets of the net assets of some company. See, net assets if it's given. So you have to consider this for sure. But you have to see whether these net assets are now with you or not. If it's not there, please reduce it. Okay, please reduce it. Cool. So I have just been reducing it because now I don't have the hold on that asset. Clear? I just reduced it. Now if you can see the first question or the first exhibit which I didn't read it, are there any changes I have to do? So it's very simple. The company has 60% initially it was having, so 510 net asset was there. They were having goodwill also. So everything is not considered basically in your cash flow statements. Did they get anything in cash? Yes or no? Yeah, if they got anything in cash, ma'am, 140 is something that they got. But what have they sent it off? Like what was the profit on sale of disposal? If you remember, I got in the first answer. Yeah, you can check it, you will get it. You were having profit on sale of that disposal was 47. So yes, if it's a profit on disposal over here, you have added it. So yeah, please like remove it from here, the operating activities. So yeah, what I have to do it, profit on disposal. If you want, I can make again. I can like try to formulate that over here. So on 1st October 2004, the company has purchased 60% of the shares. The fair value was 510. Cool. The NCI at the balance was 215 and they were having the net assets of 50. So everything we have done in the first answer, can you read it? If you can, pause it and read it for the first time again. Now what happened basically? They have got 140's cash. Yeah. After selling, I got cash of 140. So yeah, cash is 140 for me. Yes. Okay. Now what is the fair value which I have still now? I have retained it 300 because I have retained 40%. So fair value of whatever I have retained of 40% was 300. Yeah, if you remember. What are the things which I just went it off? Yeah, if you remember, I was having the NCI's balance in the question number 1. If you remember, NCI was basically at 247. Yes. Yeah, these are the things which I am having at the debit balance. So what was credit? The net assets, yeah, which I just gave it. Was it 590? Yes, ma'am. Goodwill also I gave it at 50. Yes, ma'am. So doing all the stuff, was I getting 47? Yes. So that's what I'm saying. It's a gain on disposal of the group. So now, if you don't have that asset, what are you going to book on? Yeah, what are you going to book on? Yes. Now over here, where it has been written, cash flow statements of operating. So I have considered all those stuffs. So now it's very important for me to write anything if I have made a gains or losses. So yeah, I have made any gains and losses, just write over here. I have to write it because all the stuff I have considered it over here, okay, on the profits over here. Can you see this in the question? Over here, if I'm having any profits, okay, so what I did it, just try to remember, if there is any sale or purchase of anything of disposal, so when does it goes? Ma'am, it is an investing activities and not an operating activities, correct? Yeah, so it's an investing activities. So how much cash am I getting it? So if you see the investing activities, if I'm writing like proceeds from disposal, so how much cash I'm getting it, guys? 140 is my investing cash. I'm getting it, right? So can I record it over here 140? Yeah, I can record it over here 140. I can record it over here 140 for sure. But if you remember, there is something else also we have to consider it. And yes, over here, if I'm selling it, am I getting any losses or profits in the name of company? Yeah, I got some profits also. If you're getting any profits, do you think that would have been added? Yes, that would have been added in your operating things. Because what they told, all the stuffs considering the exhibit 1 and 2, they have already added in and prepared the cash flow statements. So yes, if they have prepared the cash flow statements, please y'all are supposed to like reduce, because this is not your operating activities, it's your investing activities. So profits from disposal, which was 47, please reduce that, minus 47, and minus 5. What's that minus 5? You remember? 50 was the asset that you purchased and 45 was the asset that you sold, exchange thing. Yes, was that fine? Yes, so I have to reduce that also. So a lot of concepts I have did it. So 188, 75, 47, 5, and I was also having one more balance here. If you remember, was I getting something like share? Yeah, I was also getting some shares, right? So shares in the profit, yeah. So even that people would have added. Please minus. Please reduce that share of associate. Share of associate was 24.6. Yeah, so that also I have to reduce it, 24.6. Yeah, so I have considered a lot of things. And now we get a balance of cash. What's the closing balance of cash? Yeah, if you can see in the question, it was presented 20.9. Yeah, over here. Is it this? Yeah, this is basically the opening balance of cash. But now you don't want this company, you don't want this Doyle company. So it's a negative. So it's a negative because you don't want. So maybe at the end you can write it negative, because over here I don't want the cash, don't want that cash equivalent. So it's how much, guys? It's negative. It's negative 20.9. Negative 20.9. So if you, it's not written negative 20.9. So whenever you make up a total, whenever you take up a total, yeah, you will get to know, acha, why is it, it's positive 140, yeah, you're getting a sales, right? Yeah. So whenever you take up a total, you will definitely get the balance. Okay. So students, over here, I would like to just summarize the statement for you all. Just give me a minute. Yes, so students, we are having so many people live. Just tell me now, did you understood this? Okay. So yeah, I'm just figuring it out. Yeah. Yeah, let me just get things in chat. Otherwise, I'll explain you again. So there are... Okay. I'm finding for the chat first. Why am I going offline? Yeah, students, tell me now, please. Yeah, I'm just visiting for the chats so that I can understand. Did you understood? Yes, ma'am, it's visible. Okay. Yes, ma'am, understood. Yeah, Sukanya ma'am, did you understood it? Yes. I just got it. So yeah, I'll just take up the total now because I'm getting some chats and all now delayed. So I just eventually check up and I take up some time for that. Okay. So now it's very simple. We can just go ahead and just make up the total also. It's very simple. Yeah. Okay. Yeah. Cool. Okay. So these all stuffs which we tried and make it. Yeah. So see students, it's not like always very easy for you all to like understand each and every stuff. If something is there, for example, if I have purchased a company, whatever cash I would have paid, it is going to go out. If I would have made a sales, if I'm getting something, it is going to come in, obviously. And if I'm having some assets which are basically of that company which I have sold, if you would have initially recorded it as your net assets, now you are not supposed to record it as your net assets. So that is all your negative things, okay? That is all your negative things. So over here, where I will summarize the things over here, if you can see again the question, yeah, this is important, so I'm taking a lot of time. Okay, so the carrying amount of the net assets over here of that Doyle company, which now I don't have any huck, I don't have, it's gone. So now this PPE also you have to negative, you have to reduce it. Yeah, so this is what we reduced it. Okay, if you remember 311 I reduced it. If you can see 311 I reduced it over here. Yeah, I reduced it 311 because now I have disposed it. Similarly, this 200.5, whatever inventory you were having, you have to reduce it because you have disposed it. Over here, same way, other receivables, you have disposed it. In this also, you have disposed it. Yeah, cool. So that is all such stuff I have disposed it because they are having negative thing. For payables, I have to add it because it's a reverse thing. Yeah. Then over here, all the stuff I did it. Yes. Then what I understood it over here. Yeah, I was having cash balance of that company. I just reduced it. So 20.9 also I just disposed it. Yeah, that way. So all these things are easy and I think you guys have understood it. And why I have calculated all the stuff again, added back and all, because this is what they have given in the question. Whenever they have prepared the financial statements, yeah, they have considered, they have charged, they have considered all the forms of disposal also. So all the stuffs are already been included in the part 1. So okay, considering all this I have made it. Now let's take up the total and find out the final statements. Okay, final thing. Okay, so without any further delay, we'll just let me open up the thing. Why am I not getting it? Yeah, like, wait a minute, huh? Yeah. Okay, cool. So my first and the foremost thing which I have to come up over here was the balance, considering what? The cash flow from operating activities. So what are the cash flows from operating activities? So you have to take up the total till here, operating activities. Okay. So what are the total which we are getting it? Yeah, I'm getting it. So if you make up the total like this only, if I'm doing it, am I getting something like, if you can see in my Excel, is it 44.2? Yeah, I'll just take up the sum. I'll just take up the sum till here. Am I getting 441.1? Yeah, I'll make it as an operating activities. Now what about the investing activities? Have they presented anything like, yeah, ma'am, these are the stuff till here, investing activities. They have not given any financing activity. It's okay, so I'll not consider that. Yeah. Is it so? 1696.7. Yeah, cool. Yeah. Is it clear? Yes, ma'am? Clear. Okay. Can we go ahead with the third question? Yes, ma'am. I'll just try to save it. Yeah. Maybe okay if it's not. Okay, I'll just save it. Okay, save as. Yeah, answer. Okay, I'll just save it as desktop. Cool? Yeah. Cool, ma'am. Understood. Okay, yeah. maybe, yeah, okay, now I'll just close it, and yeah, I'll just open up with the solution which is there. And yeah, we have to go ahead with the third question also. Yeah, question 1. Now moving ahead towards the third question. Yeah, what is the third question and the fourth question? I always told my students, so they know that the first question in that financial instrument, some of the other concepts will come. Okay, and in this IS 12, which we are recently going in the class, so IS 12's question is also there. Yeah, see that. Yeah, this was something I was trying to explain you in the class yesterday. Using the third exhibit, evaluate the proposed treatment for the DTA, deferred tax assets. Cool. So yeah, let's go ahead with the third question, and yeah, we'll try to answer it, the third question also. Yeah, let's read it, the question what they have presented. Let's go up with the third exhibit, and I'll copy the third exhibit for sure, and we'll read it downwards. Okay, about the deferred tax asset. Okay, about the deferred tax asset they have given up. So yeah, what was deferred tax asset and which is the standard? So yeah, we know IS 12 is basically about the income taxes, right? So in income taxes, what we know, if normally I have to pay the taxes on the current year's profit. I normally pay the taxes on the current year's taxable profit. But I know at times, whatever you think, your taxable profits and your accounting profits can be changed. Your accounting profit is being made as per the IFRS and the standards, but your taxable profit is being calculated as per the income taxes. If your accounting profit is more, than your taxable profits, definitely you will be ending up paying lesser tax. If it's lesser tax, in future you will be having a liability. Yes, that means I have to create a DTA. But if it is opposite thing, means in your books of accounts, if your profits are lesser or if you are having losses compared to the taxable thing, so definitely in the tax purpose you would have paid tax already. So that much credit you can take, means you will be having a DTA. Considering that perspective into the mind, we'll read the question. Yeah. So exhibit 3 says the DTA, the Hill company has made a loss. Okay, the company has made a loss in the current year. Okay. If the company has made a loss, means where they have made a loss? Ma'am, they have made a loss in their books of accounts. Khali itna bol ke, just I'm saying that much, it is clear. In your books of accounts, your profits are less. Your tax, your profits will be more. Means in the books of accounts, you would have not paid taxes, but as per income tax, you have paid extra. Today, if I'm paying extra, I'm feeling hurt, but obviously, if you pay extra, it's your asset. So that creates a DTA. But to create a DTA, we know one concept, like I can create a deferred tax asset only and only when I am sure that in future things will be reversed. Reverse means it needs to be a taxable temporary difference and not the permanent difference. For example, today I'll pay more taxes. Thinking what? Today I'll pay more taxes, thinking that maybe in the future my books of accounts will be having more profit, so that I can adjust at the time for future. Means today, just try to understand. Okay, I'll read the question and then we'll understand it. The company made a losses in the current year in the separate and financial statements, as well as in the 2 previous year. Oh, in the 2 previous year also you are having loss. Means I think this company is not good. Maybe they are making losses only. Yeah. Think. In the consolidated financial position, it proposes to recognize the DTA. Acha, in the books of accounts you want to record DTA, and you are thinking that you can carry forward the unused tax losses. Yeah, this is a definition which I have explained, yeah, in the class also, that is DTA. So deferred tax asset means today if you feel like, okay, you have paid more taxes at school because your taxable profit is more than what? Your taxable profit is higher than your accounting profit. It's okay. It's okay. For sure it's okay. And if I feel maybe in the future there will be reversal, means in the future your accounting profit will be one day aisa ek din aayega, where your accounting profit will be more than your taxable profit, and at the time I will try to reverse the situation. This is what my thought process was. Okay, so yeah, and these losses cannot be surrendered to any other company. Okay, cool. So now what happened? On 30 September 2086, the company breached the convent attached to the bank loan. Means the company was having some loans also, and they breached the loan, means they are unable to pay. That means a surety. The company's position is not good. First of all, the guys are having losses, and beyond that, they are not able to pay, satisfy the loans also. Okay. And just like Vijay Mallya, which is due for repayment in 20x9. So their position is not good. The loan agreement states that the breach in the loan covenant entitles the bank to demand the immediate repayment of the loan. Means in the statement there was a situation, a contract, that if you are not able to pay the loan, yeah, I think like okay, I'll give you 3 years, but if you are failing up to pay, I'll immediately call, chal pay me aaj ke aaj it is. Okay, so maybe there is a situation which is loss. Hill company and its subsidiary do not have liquid assets also. What bad company they are. Yeah. So the company has produced a business plan. Oh, they want to make a business plan. Cool. With a forecast. In future, they want to get it improved in the financial condition. Whatever they were having in the next 3 years. As a result, they want to launch a new project. It's okay. Whatever you want to launch a new project in the upcoming years. What is your scenario today? Just think. Today. Just think today. And in the previous 3 years. And in the previous 3 years. 3 years. Tell me now. Yeah, 3 years. What was the books of accounts situation? What was the books of accounts situation? BOA, books of accounts. Ma'am, they were running into losses. If they were running into losses, were their profits more? Ma'am, it's a loss. So were they paying tax as per books? As per books. As per books. No tax for sure. No tax. But is it same for tax? No. Maybe tax purpose they will be having income. Whatever it is. Means maybe for tax purpose they will be having some income for sure. Only in the books they have written. Okay. So maybe if they pay taxes. If they pay taxes as per income tax means they will be having more taxes. That means definitely they will be having a DTA. Deferred tax asset they will be having. So if you remember one concept as per IS 12. As per. Okay. Just try to understand is. As per IS 12, which is income taxes, an entity can recognize deferred tax asset only when I think like, okay, today if I'm paying more taxes, and if in their books of accounts, if there are losses, or if they are not able to pay taxes today, means they are not in the position, they don't have so much of profits. But I know that tax which I paid extra can be utilized up in the future, that maybe they can utilize it for their future taxable profits. Agreed? Yeah. But looking at the condition of the company, I don't think that in future also they will be having a profit. First of all, they are not able to satisfy the loans. Even the banks are not happy with their position. So maybe they will not have even profits. So why to create an asset? Why to create an asset? Unnecessarily asset if I create. What am I doing? Ma'am, if I am creating unnecessary asset, that means definitely I am at a position that I am, like for example, hitting a concept of prudence. Yes. I cannot overstate my asset. Yeah, I cannot overstate my asset unnecessarily. So yeah, I am doing something which is eventually not perfect. So yes, we have to formulate the answer considering this point. Okay. So yeah, let us go ahead with the solution. Yeah, the solution is already somewhere I have made it. So obviously, I'm gonna just put it. So according to IS 12, the entity should recognize what? Yeah, just understand. The entity has to recognize what? I'm just pasting it. Yeah, as per IS 12, an entity should recognize the DTA in respect of carry forwarded of unused tax losses to the extent I feel in future I will be having a taxable profit. If I feel I will not be having taxable profits in the future and I can utilize that, then it's better don't create an asset only. So over here, IS 12 stresses that the existence of the losses over here in the question it is available that there are strong evidences. In the question it is written that there are strong evidences that in the future you will not be having the profits. Like it stresses that the unused losses is a strong evidence. Unused losses is a strong evidence that in the future you may not have taxable profit. Guys, if I don't have taxable profit, is it okay? Is it okay to book now? For this reason, I think it's better not to book the DTA, right? So over here, what happened? Yeah, in the question, so IS 12 states that the entity should consider whether I can like incur the future profits. If not, please don't book. Okay. So yeah, as per the situation, yeah, I'll just paste it over here. What is there visible in the question? So IS 12 states that the entity should consider whether the tax losses resulting from the causes are likely to recur. Like, are they going to anytime get it again? Will you get more losses? So over here, I got to know the company has been making the loss for continuous 3 years. And therefore, the company is having a doubt like whether they'll be able to pay or not, or whether they'll be able to like in future also incur any profits or not. Yeah, so it's a doubtful situation. So the company doubts about the future profits also. Yeah, obviously even I'll be having a doubt on the company if they're not incurring. So above over here, the company is having the forecast. Achha, the company is pakka telling achha, they'll be having a situation that they'll be earning profits. Are we just cannot trust you. We just cannot trust you. Yeah, we just cannot trust you. Like whatever the company says, if I trust them, so the unnecessarily DTA they'll put, and they will inflate the assets, which eventually should not be the position, right? So over here, if you can if you can just read the question which they have presented over here, it's written, although the company is forecasting, the company is expecting that a future may they'll be having the profits because now they are having to launch new project. It's okay, but I feel reliability is not there. I feel it is difficult to be reliable forecast. I think like that way only they are saying. It's not true. So more emphasis is to be given on the existing products, and existing products for sure they are not working well. So finally, I know the company has also breached the loans contract. See guys, what we have to write is, whenever the question comes, we have to like nichod dene ka pura question. We have to frame like completely. We have to think, acha, what is the question? And even if they have written one statement, what can be the relevance? So usko aage piche karke we have to formulate, we have to give our answer. Okay, cool. So yeah, the company has breached the contract over the bank also, and some uncertainty exists. So that shows okay, maybe today they are having so much of loss. I doubt maybe this company is having a going concern position or not, whether in future also they'll work or not. Maybe yeah. So yeah, they can have a problem of going concern also. So again this creates a doubt. Okay, future में will they be able to actually utilize the DTA or not? If not, please don't do it. So it seems, yeah, maybe I think the company which is booking the DTA, I think it's better they don't book DTA, because I feel that they are not in the position to book DTA because they will not be able to utilize it. Okay, based on this, I feel like this could be my conclusion. It seems that the Hill company will be doing the incorrect recognition of DTA. So they are not supposed to book the DTA. I hope it's clear. Yeah, I hope it's clear. So it's okay, don't book like that way. Yes ma'am, it's clear. I think the writings are very small, right? I think the writings are very small. Ma'am, are you able to see it clearly, or is it very small? No, I think it's visible. It's okay. It's okay. It's not so small also. Yeah. So yeah, we are having a lot of participants. Okay. So yeah, we have done with the third question also. Yeah, let's move ahead with the fourth question. Yeah, just fourth question means the first question's fourth part, which eventually will fetch me 40 marks. Yeah. Yes, ma'am. Clear? Okay. If it is visible, I am pretty cool with that. Okay. Yeah. Last is one of my favorite questions, and I know my students' favorite question too, which comes from the concept of compound financial instrument, which I normally say, आएगा तो इसमें से ही आएगा. If IFRS comes 9, it will come from this only. Yeah, I'll just open up that question for you guys. The fourth. Okay, question number 4 is for 6 marks. They have written, using the exhibit 4, please discuss the suitable calculation. How the convertible word, if comes, we have to think that convertible bonds should be dealt within the conso for the year ended on 30 September 2027. Okay, I'll just paste it over here, the question. Yeah, and beyond that, I would like to paste the exhibit 4 also. So I'll not go ahead upar niche, I don't want to do it. Okay, bye. So students, I'm telling you, if you want, you can do like that things in the question also, exam also. You can paste whatever the exhibit it is, so that like a huge time is being saved to check on the exhibits and go on again up and down. Yeah, cool. Okay, I'm just, students, we don't want even the discounting rates. We are very intelligent to get the discounting rates if they have not provided us in the question also. Yeah, I'll just provide over here the question. Okay, beyond this, they have asked us to calculate for the convertible bonds. So if the question of convertible bonds comes into picture, I know one more concepts. So what is basically convertible bonds? For first, as per IFRS 9, we know if I'm having any, like if I am the company, if I'm issuing, yeah, it's readable. Yeah, okay, thank you, ma'am. Yeah, thank you, ma'am. So I just made it 110. Yeah, the sides. Yeah. So basically, if I am investing somewhere as a company, as an individual or the company, if I'm investing somewhere with the expectations that I'll get something, it's my financial asset, right? So is basically IFRS 9 says, and the definition of IS 32 says, the financial instruments means for some party it needs to be a financial asset, and a contract as such for one party financial asset, for another party it can be the financial liability or equity. So basically the one party who is going to issue things, issue the bonds and all, for him financial liability will be there if he is responsible obviously to pay interest and maybe by the year end principal. But what if it is a convertible thing? Convertible means it gives an option to the holder of that instrument. Like maybe in future if I want, I can convert it into equity shares also. So that gives a dilemma to that company who is issuing that, yeah, whether should I book it as a financial liability or equity? I'm having a doubt. So for that party, what is better they have to do is, they are liable and they have a situation that they have to think what will be their present liability to the max. So they'll think maybe there is a chance that it can be converted into equity, that they cannot take a risk. So if there is an instrument which is having both the components of the financial liability essence and the equity essence, they have to book in both the phases. Some portion they'll book as a financial liability to the maximum extent of the present liability, and whatever they got it today, means whatever they got it at the time of issue in hand, and if there is any sort of difference, that difference will be their equity component. I know students, it is something which is very known to you all. So yeah, without any further delay, I'll take up the things. Where I require more time, I'll take more time, and when I know the people knows this, I'll not take so much of time. And beyond that, if you remember one concept I told my students, that if today any company, for example we are the company who are going to issue the bonds, that is convertible. If I issue the convertible bonds, will I give them exactly the same interest which is as such for non-convertible? Ma'am, no, because along with that bonds you are giving them some right. If you are giving them some right, please don't give that much interest also. Yes. So yeah, let's read the question, that is convertible bonds issue. So on 1st October 2006, on the day 1, the company issued convertible bonds whose par value is $20. Okay, so the valuation is 20 millions. Cool. Dollar. The bond is redeemed for cash at the rate of 30 September 2008. So how many years? Yeah, ma'am, maybe 2 years. Yeah, after 2 years, it is going to redeem. But what type of bond it is? Convertible. Convertible. Okay. The bond holders can instead opt for conversion in the form of fixed number. Means who is having the option? The one who is having the holders. Okay. The holders has the option. They have told interest on the bond is payable at the rate of 4%. So interest they'll pay at the rate of 4%. That means what? I mean, interest is 4%, like whatever the amount they have got every year, the company, our company, Hill company, has to pay interest, right? And at the year end, they have to pay the redemption at the rate of 4%. Then what is this? The interest rate on the similar debt without conversion option is 10%. Yes, if conversion was not given, we'll give you more interest. So now this interest becomes nothing other than the discounting factor. The discounting factor. And thanks, they have already given us a discounting factor of 4% and 10%. And you know what? 4% is given for me just for confusing me. So people will do mistake and they'll end up doing. They'll take up, instead of 10, they'll take up 4. It's okay, but we are very smart enough. So we know how we will go ahead with the thing. So first of all, what I have to do? Okay, I have to write the convertible bonds. So yeah, we know when it is convertible bond and the compound instrument, what is my solution first? Yeah, so if it is basically compound financial instrument, it is having both the components. Both the components means which component? Some portion I'll be having of equity, some portion I'll be having of debt, right? Agreed? Yes. So Hill company is issued the compound financial instrument, means the bond has the characteristics of both financial liability obligation to repay the cash. Yes. And an equity component also. Agreed? Agreed to give the number of shares. Very clear. So this is the definition which I have to give. Then what is IS 32? So IS 32 says that Baba, we have to make the financial instruments presentation. So how will I make? Okay. So my things will be divided into two parts. See students, first of all check, this is for 8 marks or 7 marks. So directly your answer will be wrong. So you have to paste all these things. Like for presentation purpose, what I'll do, it represents that the compound financial instrument needs to be split in two parts. Split in what? Split into the liability component. Hey, what is liability component? Liability component to pay the cash. So what I'll do, we will discount it. We will get it the present value today. Simple. We can make the present value today. Yeah, we can make the present value today for sure. And what about, guys, what about the equity component? Yeah. What about the equity component? Yeah. Considering what? Discounting at the rate of market rates. Yeah. I'll discount it at the rate of market rate. So liability component means I have to measure it at the present value considering what? Market rate. What's market rate? Guys, it's 10%. The discounting factor at the rate of 10%. And equity component is what, guys? Equity component is, ma'am, it's very simple. Like whatever is a leftover situation, means day one issue what you get and what is the present value. What's the difference? You get it as your equity. So what I have the return over here is an equity component means what, guys? An equity component is the obligation to issue the fixed number of shares measured at a residual amount difference. Okay. So yeah, that is what they have given us. Yeah. Is it clear? Is it clear? Okay. Are you getting it? Yes or no? Yes. Clear, students? Yes, I hope it's clearly visible, clearly audible. Yeah. Okay. So equity component is something which is the difference between them. And yeah, they have to split between liability and they have to split between equity. Super. Clear? Yes. What's up next? They have provided in the question. Yeah, we'll read that. Yeah, that is based off IS 30. Okay. Now, we have to account it, and the accounting is something which we know very easy. Yeah, students, we know we have to draw the table. Yeah, we have to draw the table. Yeah, it's only for 2 years, right? Okay, so I'll take up what's my opening liability and something like that. But before that, ma'am, we have to do the present value also. Yeah, move ahead to with the present value. Okay, how many years, guys? I am having 2 years. Year 1, year 2. What is the payment we have to make it? What's the payment? The cash flow the company has to do. The cash flow the company has to go ahead. And yeah, the discounting factor at the rate of 10%. So yeah, year 1. How much will you pay, guys? Yes. Yeah, now this terms to be important. Okay. How much will the company pay? Yeah, the company is having a par value of $20 millions, and on that interest is to be paid at the rate of 4% when it is to be redeemed on 30 September 20x8. So I'll write it 20x1 and 20x7 and 8. Okay. So over here, the year and basically 20x7 and 20x8. Cool. I'll just write it. So 30 September 20x7 and over here it will be 30 September 20x8. So how much will you make the payment, guys? How much will you make the payment? 2 millions into how much? 4%. If it's 2 millions into 4%, what is the amount? What's the cash flow? Yeah, I want the answer. Yeah, do have it. 2 millions means 20 lakhs into 8%. Are you getting around 1 lakh 60? Yeah, so it's like 1 lakh 60. If the discounting factor is 10%, this is something you have to pay at the end of the first year. What is the amount that you get at the discounting factor? Yeah, bring it, divide by 1.1. Yeah, divide by 1.1. If you divide it by 1.1, are you getting something around 145,454? Are you getting 145,454? Yes. Yeah. Yeah, is it so? Hey, is it how much percentage was the? I did it 4% or 20. Just give me a minute. Yeah. Let me check what the question is over here. 4% and the discounting over here is based on 20. Yeah. Okay. 20 millions into 4%, not 2%. Okay, I'll write it over here. Cool. It's over here. 20 millions into 4%. So which comes up at the rate of how much? 20 millions into 4 percentage. Is it 80k? Yeah. 20 millions. Yeah, just give me a minute. Yeah, it's readable. Okay. Yeah. So it's 20 millions into a 4 percentage. Is it giving me 0.8? Yeah. It's giving me 0.8 millions. Agreed? Yes. If you take up the total, or if you're comfortable with all the zeros, I am mostly comfortable with all the zeros. So if it's 20 millions, I'll just multiply it with 10. So yeah, I'm getting 0.8 millions. So if you divide it by 0.8 divided by 1.1, are you getting something around 0.72? Yeah, I'm getting 0.72, 0.727. So can I write 0.73? Yes. And at the end of the year, you will get an interest of 0.8 millions. Along with that, guys, I'll get something else also. It will be redeemed also, yes. Plus 20 millions becomes your principal amount. So by the end, I will get all those stuffs. So it's nearly is equal to around how much, guys? Is it 20.8? Yeah. Can you divide it by 2 times? Like 20.8 divided by 1.1 divided by 1.1. Are you getting 17.12? Yeah, 19.0, etc, etc. So yeah, it gives me 17.18. Okay, cool. So if I'm getting this stuff, can I get what is the total value of the present amount? Yeah. So if you take up the total, guys, my present value turns around to be 17.18 plus 0.73. Is it 17.91? Yeah. So that 17.91 turns around to be what, guys? This is your present value, right? So if I say it as a present value of what, guys? It's a present value of the liability. Yeah. So we consider this as present value of the liability. So this is nothing other than the liability component. So you will be figuring it out, ma'am, what will be then the equity component? So what did you got on the day one? So day one, at the time of issue, the company got how much? The company got 20 millions. Agreed? The company got 20.00 millions. So can I take the difference? Yeah. If I take the difference, definitely it's what? Yeah, the difference is nothing other than, so the difference, yeah. Yeah, so the difference turns around to be what? Turns around to be the equity component. Yeah. So what's the equity component, guys, in that? Oh yeah. If you take up like this, 200 minus 17 point, 200, no, it's 20. I'm so sorry. 20 minus 17.91. Am I getting something around, yeah. Is it 2.1 millions? Yeah. Is it around 2.1 millions? Yes. So 2.1 is nothing other than the equity component. I hope it's clear. Yeah, very clear. So yeah, over here we have understood about the equity component and the liability component also. Yeah. So how will I present up in the question? So I have to write it. Okay. This is the equity component which I have to measure it. Yeah. And the liability component also. So what have they asked us in the question? Only this much am I supposed to write? So they have given us the question, discuss the exhibit 4 and discuss the suitable calculations. Okay, I have added it on the day 1, present value, I have calculated it. How the convertible bond should be dealt with the consolidated statements as on the 31st September. Okay, so you have to fully give till the year end of the first year. So yeah, my students, we know that we have to do one more concept. If this is my opening liability, I have to go till the year end. Yes. So yeah, my opening liability is what, guys? My opening liability. Okay, I can book it on 007 first year was 17.91. Yeah. On that, the interest is to be paid. Now tell me which rate. It will obviously be 10% and not that rate when you make the payment. Yeah. Right? Agreed? Yes. Interest, that is nothing other than the finance cost. Yeah, I can just write it, the finance cost. The finance cost at the rate of how much, students? At the rate of 10%. Yeah, I can just make like this small. Finance costs at the rate of 10%. Okay, yeah, cool. Later on, what am I having? Okay, if it's 10%, can I multiply this and take 10%? Take that 17.91 into 10%. Are you getting 1.791? Yeah, 1.791. Students, now these finance cost, where it is added? Yeah, it goes in your P&L statement, right, as an expenditure. Okay, so that you are writing it over here. Somewhere you have to tell, na? My examiner, I have to tell, Baba, this goes in your P&L account. Okay, so what I do? Do I reduce my liability somehow? Yes, ma'am, we have to make the payments. Yeah, what if I have to make the payments? Reduce it. So actual payments, that is cash paid. Cash paid. How much cash I paid in the first year? Yeah, ma'am, the 20 millions. Into what interest I paid it in the first year? Guys, I paid 4% interest. So how much did I pay in the first year? Yeah. Was it this 0.8 millions I paid it? Yeah, it's 0.8 millions, 0.8 millions. So can I reduce it? Can I write like this? 0.8 millions. I reduced it, and yeah, nothing else. I get my closing liability. I get my closing liability, which is 7.91. Yeah, you can please take it. 7.91 plus over here 10% interest minus 0.8. Are you getting clearly about 18.89? Can I take 18.9? Yeah. Now this is my liability. See students, nobody has asked, but for me, if I want to do it, I can just carry forward and take this. I can add 10% interest on that. And what is my actual payment? 20.8, so that you get the 0 by the end. Okay. So 20.8 for you to just read it for once. Do with that 10% minus 20.8. Are you getting 0? Yeah. But the question has asked only this much. So this you have to interpret. How will I interpret? Yeah. For interpretation, I need to go ahead and write that. Okay, the finance cost is the situation where we have to add it where. So yeah, I'll just write it over here. So yeah, the finance charge which is being measured is to be recognized. Yeah, is to be booked in the P&L statement. Yeah, in the P&L statement. Yeah, and what's the amount, guys? It's nothing other than 1.791 dollar millions, which to be shown where in the P&L statement. Then what is my liability? Okay, the liability is closing liability, means the liabilities balance, the closing liabilities balance at the year end turns around to be what? At the year end is basically 18.9 dollar millions. Cool. Then do I have to pay anything else? Yeah, actually I paid it. Yeah. So the actual payment of how much? Of in the first year of 0.8 dollar million. Yeah, I don't know where it eventually stopped because I was about writing things. And yeah, let me first check it where I stopped it. Yeah, I was writing, and maybe I just booked something and it stopped somewhere. Okay. Okay, the actual payment of, yeah. Okay. The actual payment it was, I was just writing, and yeah, things happen. So the actual payment was 0.8, which we made. Yeah, this one in the first year. And that is nothing other than the reduction of the liability. Yeah, and the payment of the cash through cash. So yes, students, with these, we have completed question number 1, which is very important from the perspective, yeah, of the examination also, because yeah, it is obviously about the consolidation and the first part, which we just cannot ignore it. So I think yeah, it's clear. Do you want a break, or yeah, can we start it with the second question? Yeah. Are we fine, students? Yeah, can we start it with the second questions? Yeah, we'll just take a break of 2 minutes and I will resume it back. Sure. Thank you. Yeah, so students, so welcome back to the second question of section A. Yeah, are we all back? Yeah, just please confirm me so that I can start. Yeah. Yeah, so the first question was easy, na? Not so difficult. Like for those who have not even studied, like there are certain for them, yeah, the classes for which consolidation is yet pending. But I know it is something which is manageable. Yeah, if we could understood this much, it will be very pretty good. See, actually, is it visible or not? Yeah. Okay, yeah, Sukanya ma'am, you're there. Nandana ma'am, you're there. I don't know others also participants. Like, nobody has returned the name, so how will I recognize them? Yeah, yes मैम. ओके सुकन्या मैम का यस आ गया तो भी मुझे टेंशन नहीं है, तो आई कैन जस्ट स्टार्ट इट. ठीक है, वो मुझे ऐसा लगा रहना पड़ता है, वो एक तो मुझे लेट आता है. चलेगा, चलो कुछ नहीं कुछ नहीं. नाउ वी नो आफ्टर कंप्लीटिंग ऑफ द फर्स्ट क्वेश्चन the next question becomes easy because it is an ethical part. An ethical part is something which we can manipulate, not sorry, we can interpret as we want, not manipulate. I'm so sorry. We should not manipulate it. The people will manipulate it. We have to make it clear, yeah. Otherwise, मेरा memes बन जाएगा यहाँ पे. It's okay, no. Sorry. Okay, चलो. Okay, so yeah. Again, the thing which I do it always is to read what they have asked us in the question. So discuss the ethical and accounting implications of the above scenarios. When it's scenarios, maybe both the things I have to consider it. Like there will be one or more than one scenarios. You have to consider it from the perspective of the accountant. The marks are 18 and 22 marks will be given for professional. Yeah, for professional marks, we know we are not supposed to write anything. But if we write properly, we get the 2 marks. So to be very frank, these 2 marks are the bonus. You have to write it properly. Okay. So yeah, we have to give the accounting implications and ethical implications. Okay, so we'll read the question. We'll be taking time properly. ठीक है, आराम से पढ़ेंगे. Okay. So there is a company whose name is Justoso, whatever. G company, I'll say. Please, I'm very bad at pronunciation. G company is a public limited company which produces the range of luxury food products. Okay, so basically, I guess there is one company who's preparing some food products and they are trying to make the things. So we have one concept. I will be figuring it out in the chat. If someone gives me the correct standard ka name, yeah, I'll be very happy. It prepares its financial statements in accordance with IFRS. Okay, the directors of G company receives a cash bonus each year if the reported profit of the company exceeds the domain target. Yeah, we know everybody has to do the same, like every company. If you reach the target, you get some bonus. Okay. The company has performed in excess of the targets, means they have did a good work. In which year? Just try to analyze. Okay, the company has performed better than the targets in the year ended on 31st December 20x7, but in the financial forecast for the next 20x8 are pessimistic. Means there can be something else also, but in the year 20x7 they have performed better. Okay, the following exhibits are given on the left hand side. We know it's given on the left hand side about the 2 things. About the provisions. Okay, what's provisions? Yeah, if it's provision, which standard it hits? Yeah, I want to know. Yeah, waiting for Sukanya ma'am to answer. Yeah, मैं मोबाइल देख रही हूँ. Yeah. Yeah. Is it IS 37 provisions? Yeah, I'm stuck to what? Nah. So yeah, let us understand with the provisions. Okay, so something about provisions has been asked in the question. So yeah, I will be framing it that way. So provisions. So it describes provision may what happen. Provision describes provisions. Okay, in that provisions, that describes that in the first exhibit, that is provisions exhibit, what they have asked us. It describes that what to be recognized in the financial statements for the year ended on 31st December 2007. Okay. Second, there is a contract which says about the wheat contract. So they need to know wheat contract, is it a derivative liability? Okay, so when it is derivative, we have a concept of IFRS 9. We have to see Acha, if I'm doing in these contract, is it a derivative contract or it's a normal contract? So when it needs to be a derivative contract, there should be certain settlement. There should be settled settlement. Yeah, yes, Suganam, IS 37. So there should be settled settlement, and you want to gain gains and all those stuffs. Okay. So we have to understand whether it is a normal contract or something else. Okay. Moving ahead, this is the information which we have to read it to respond the answer. So the first provision. So yeah, try to give me the answer. It's easy. A new accountant has been recently asked, started the work at the company. The accountant found that the provisions made for the year end 31st December 2007 is significantly higher than the previous year. If your provisions are higher means what? Maybe if your provisions are higher, your expenditure will also be higher. Maybe you will be paying less profits. Yeah, because expense account debit to provision. So maybe you were trying to manipulate things. Maybe what can be done? So she made inquiries of the finance director, who explained that the increase was substantially due to change in the food safety hygiene laws, which become effective from the next year. Okay. Do you remember I have explained in the class also, if there are certain things for hygiene, for law, or for environmental damages and all, what we used to book, we were not supposed to book the whole change. We used to book a provision to the max amount of penalty, right? Yes. Because if I want in future, I'm booking a lot of provisions, and in the next year if I don't run that business, if I close it, yeah, it is unavoidable. It is not something which is inbuilt. So it's an avoidable expenditure. So we may not book. Let's see. As a result, the company must retain a large proportion of its workforce. So what happened? As a result, they have to retrain. If they have to retrain because of some health hygiene, so they need to change the work expertise. So they told Catcha, as a result of the new change, they have to train a lot of people. If they have to train a lot of people, this retraining has not taken place yet. So the provision has been recognized at an estimated cost of $2 million. Oh my God. So $2 millions they have booked as a retraining cost. I'm not okay. The finance director then told the accountant that such inquiries you are doing. So the new person came, so he was doing some inquiry. So that the person told, you are doing this inquiry, it is of no use, we have to write that. Okay. The finance director then told to the accountant that such inquiries are a waste of time and would not be considered favorable when deciding on her future pay rises and bonus. Cool. Now what happened? Additionally, in November 20X7, the board of the directors, that year only, 20X7, this is about 20X7, next year is 20X8. What happened in November 27? The board of the directors were discussing some function. Okay, additionally, the board of the directors discussed a potential restructure. What's the meaning of restructure? Yeah, if I feel like the company needs to have certain changes. For example, I feel like, okay, this unit is not working properly. I want to like de-invest it. So maybe I want to restructure. I want some employees to leave my company. I want some contracts to be done, etc. etc. Could be a big restructure. I explain. First I was doing only the offline classes. Now it's online classes. It's the way the management needs to be changed. The way the process, the work needs to be changed. It's a restructure. And the provision for restructure is only to be booked if the restructure happens. Like if it's sure. Like if something can be avoided, if I don't do restructure, that's provision cannot be booked. And restructuring cannot be start booking the provisions from the day when I made the plan. No. The day when the board of directors made the plan is not enough. They have to tell to each of the people who are getting affected. Yes. The restructuring cannot be done its own. Yeah. So what they have told. In the November 20X7, the board of the directors discussed the potential restructure of the company. The restructuring plan included an analysis of the long-term cost savings, but should restructure takes place, there will be a significant short-term cost which will be necessary. So they are thinking, Catcha, if I'm doing the restructure, future may I'll be having some benefits, but today I have to incur a cost. So what are the costs? So this includes professional fees, penalties, and cancelling lease. Why happens to restructure? I just cannot do it. I want some professionals to help me out, so I have to pay them certain penalties for cancelling leases. I told you there will be certain contracts which are unfulfilled, but I have to cancel it. I don't have other option. So cancelling lease. And also the redundancy costs, because there will be a lot of people, oh I'm so sorry, there will be a lot of people who definitely will be told you are out of the company. So they'll ask the compensation, please give me compensation. Okay, for that I have to give them some cost. because of the number of employees. Okay. Even if the restructure does not take place, even if the restructure did not take place exactly as planned, alternative plan is there. Okay. Alternative plan will need to be explored to ensure the company remains going concern. Oh, means there is a position that just to be going concern, they have to make some plans also. The finance director has therefore included a restructuring provision, arguing that this is prudent. No, it cannot be like that way, prudent. A final decision and announcement of the staffs and the lessor are likely to be made prior to authorization. If you feel it's yet to be made, to tell them that we are cancelling the contract if the guys don't know, पूछ के किसको कर रहे हो? Why are you doing so? Why are you booking the provisions? It's not okay. You have to inform everyone and then start making the provisions. So this is what we know. This is what we know. So what are the ethical issues? Are my people executing it properly? So no, the accountants are not working well. They are overstating the things. They are overstating the expenses, overstating this. So it's not proper. It's better don't book the expenses so that your incomes are more. If your incomes are more, you will pay more taxes. So yeah, there is something ethical in that. Up next, we have the next exhibit. But yeah, for this, can I start writing the solution? Yeah. Okay, so what is the first thing? Yeah, it's about the provision which talks about IS 37, which is my solution will be as such. Like, okay, it's basically for this. That is the second answer. Provisions says, yeah, IS 37, it's a contingent asset, contingent liability, and the provisions. Okay, if it's provisions, they're talking about provisions having 18 marks. Please, I have told my students, if it's IS 37, start writing the definition without head and leg. Yeah, allegedly. So if it's a provision, means it's probable that more than 50% is a chance that you all have to pay. Yeah, it's an outflow. It's a present obligation because it is sure. Because of the past, you would have done something which creates a present obligation today that you all have to pay it, and for sure you have to pay it. And a reliable amount estimate is visible for you. If it's possible, only then I will book it as a provision. Otherwise, it will not be my provision. Then what is contingent liability? Ma'am, I'm not having the probable thing I don't have, but it's a possible obligation. The chances is something lesser than 50%. But over here, if it's provisions, so we have to book the statement of provision. So over here, if you can see it, I have presented the definition. Yeah. So what's that? So provisions, contingent asset and contingent liability states that the provision needs to be recognized only when there is a present obligation arising from the past events. Then outflow, it should be there, and that should be probable. The word should be there, probable. And the obligation needs to be measured reliable. Yes, this is all we know. This is all we know. Correct? Yeah. And do you think the company has to book the training cost? Yeah. What do you think? Do you think that they have to book the training cost? Yes or no? I want the answer. Do you think they have to book the training cost? So yeah, you can say, ma'am, it's not the present obligation. If they don't book the training cost, it's okay. Like next year, it's like something because of certain changes, it's not something that they have to book. If they don't run the business in the next year, that can be avoided. So it's an avoidable. My students know one example I used to give that is for sure important. That aircraft overhauling expenditure. I don't have to book the provision because it's not compulsory. Like I have another option. If I sell the asset, if I sell the aircraft, I may avoid paying that expenses, right? So expenses because of some past events. It's not your present obligation. If it's not your present obligation, no need to provide the provision. No need to provide the provision. If I don't provide the provision, what can I do? Ma'am, if you don't provide the provision, the 2 crore expenditure which you have booked in your P&L account, you may save it. So now that is not your expenditure. That means that can become your income. Yeah, sure. That can now become your income. So yes, this is the way I would like to write the answer. Yeah, you can read it. Yes, try to read it. No provision should be recognized because the company does not have an obligation. Is it an obligation? Ma'am, it's not an obligation. If it's not an obligation, it's not your provision also. The expenditure can be avoided by changing the nature of the business. So it's not a present obligation. If it's not a present obligation, the provision should not be recognized. But what if they have recognized? They have already expensed it. What the accountant has to do? They have to de-recognize it. So what will happen? You have already booked a provision. If you reverse it, your liability will be reduced and same thing will be your profit. Agreed? Yes, your liability will be reduced and you will reduce your liability and increase your profit by 2 million. Simple, very simple. Very simple. Yeah. Now, up next over here, what do you think? Like whether the things which my company did was correct? I think no, not so much. They would have not made like that scenario, but still, if they made it, okay. Now we have to reply for them. It's okay. It's okay. Yeah. Now let us understand what have they asked us in the second question. Because I have to give the ethical and accounting applications for both. Yeah, even I can write it for restructuring part, for restructuring also. So restructuring expenditure for restructuring is to be done. So the full definition you have to write it. Okay, if it is compulsory for them, they have to do it, and all the if the management changes, if the procedure of the work they changes. So even restructuring is to be not made the provision. For restructuring also provision is to be not made. For restructuring also. For restructuring, the provision is to be made only at the date. The provisions are to be made only when it is announced, when it is legally announced and discussed with all those who are getting affected with it. Yeah, agreed? With all of those interested parties and those getting affected from it. Yeah, those getting affected from it. Just merry discussion will not work. Yeah, merry discussion amongst the board of directors will not work. Amongst the BOD is not sufficient to be like created as a to be called as a provision. Is it clear? Yes, guys. Yeah. Okay. So see, my spellings and everything is very bad. Legitly, it's very bad. Restricting, no, restructuring. Yeah, restructuring. Cool. Yeah, okay. Now let us understand the second point. What they have asked, okay, about some wheat contract. Okay, wheat contract. So you remember what is IFRS 9 for first, and what is derivative financial liability? So when I talk to you about derivative financial liability, it is something like you want to safeguard yourself, or you want to safeguard yourself means, ma'am, it's a hedging. Yeah, it's a hedging. See, students, if you have any concepts doubt, you are free to see the classes which I have taken up for IFRS 9. For sure, it's there on the YouTube. And yeah, within a short span of I think 2.5 hours, we have completed that. So okay, derivative financial liability means you have entered with the plan of betting, means to earn gains, not just from the perspective of earning it. No. You have made it, yeah, not just to safeguard yourself, but from the perspective of just getting the profits. If it's such a way, then whatever there are changes on the day one, whenever you have like started with the contract, yeah, whenever you have started up with the contract, and maybe the year end, if there is any change, if it's a fair value change, we are supposed to book directly into the P&L account, because it's a derivative liability, and derivatives are normally thought from the process of like selling it and getting the more benefits. Yeah, so that is known as a derivative over here. And you will be known, like there is one more contract which is known as an executory contract. So it's a contract that has not yet been fulfilled. There is a contract which is not fulfilled, and I think it is not going to fulfill also. Means over here you will be understanding what is that in the contract, but the obligations are still remaining. Okay, okay, I'll read the question and then you will understand it. Yeah, just try to analyze, is it a derivative liability? The company, G company purchases significant quantities of wheat on which the G company records significant profit margins. Okay, so basically they are into the food manufacturing thing. So yeah, maybe they can purchase that way. The price of the wheat is volatile. Yeah, the prices of the things becomes volatile. So on 1st November 2007, The company entered into a contract with the supplier to purchase 5 lakh etc things of the wheat. So by like 5 lakh kgs. So yeah, there is some bushels, basically bushless whatever it is. So yeah, 5 lakhs things they want to purchase it, okay, of wheat in June 2028. So you will say yes ma'am, it's an derivative, like today it's 1st November 2027. So you want to purchase it on a later date. Yeah. For how much? For $5 a bushel. Okay, per, it's 5. Okay, the contract can be settled in net in cash. Okay, the contract can be settled in net. Now tell me, if you are entering with your supplier only and you have told catch a 5 May it is going to be, is it a derivative? Is it a derivative? Just tell me yes or no. Just tell me yes or no. I am figuring it out in the chats. I need to know. Is it a derivative? So there is a slight difference, yeah, slight difference between a derivative and another contract. Yeah. Yeah. Is it a derivative? Okay. Okay. I think yeah, it's not. It's see, when it is an executory contract now, or when it's a derivative contract normally wants to be settled it only in the net. Means it's not that you are in the position that you are daily dealing in it. You are not daily dealing in it. Over here, you are in your normal course of an action. He wants to purchase wheat. Is he entering into any forward contracts with the banks and all? No, it's just promising. It's just promising that okay, Baba, whatever is the price you give me at 5. Yeah, like this contracts we can normally make with our customers also. Yeah. Okay, so what happened over here? The contract to be settled. So G company has entered into similar contracts in the past also and always taken the delivery of the wheat. So whatever it is, it's a routine course of action. They are doing that. By 31st December, the price of the wheat has fallen. The finance director thought, oh no, it's my derivative liability. Let me book it in the position. Ari, how is it? Like for example, if the prices have fall down, means you have promised to purchase at $5. If the market may prices fall down, so you thought, shit, why I have entered in that? It's my liability. That way he thought of. So what he did, the finance director recorded it as a derivative liability of 0.5 millions in the financial statements and booked a loss in the P&L account. Wheat prices may rise again before June. The accountant is unsure if the accounting treatment is right or not. Okay. So over here, okay, I'll just try to explain you. When it's IFRS 9, it's a financial instrument. The financial instrument's derivative means your expectations are to do, you want to buy and sell the non-financial items which needs to be settled in cash. Sure. So such contracts are usually accounted as a derivative. Yeah. However, if the company wants to use or want to enter into some contracts for a non-financial asset, for example, like this way, non-financial asset, like for its own use, like for me only I want to purchase like the wheats and all. Is it something financial instrument? Is it a financial instrument? Is wheat, is it a financial asset? Is wheat a financial asset? No ma'am. Even it is not a hedging. Even it's not a hedging. So I have explained you in the class also about the MACD if I want to implement. Yeah. If I want to start up with the MACD, I wanted to purchase potatoes. Arey Baba, it's a normal contract. It's a normal contract. But for that, Alexi, if you are entering into any other contract, that is derivative. This is a normal contract because it is something which is your day-to-day thing. It is something your day-to-day thing. Okay. So it is not a derivative contract. Yeah, it's outside the scope. So what is this kind of contract known as? Yeah, students, this is what I wanted to explain you. Maybe in the class also I left it because like this concept is not there in your material which I have seen. So yeah, if you see IFRS 9, yeah, it's a financial instrument. It applies to the contract to buy and sell of the non-financial items. Financial items means, yeah ma'am, my debtors, my inventories, etc. etc. So it's a non-financial items. Because if it's a non-financial items, if it's an inventory, if I purchase inventory, guys tell me, financial item means, financial asset means, ma'am, it's debtor, somebody else ka creditors. Yeah. That way. If it's an inventory, is somebody else going to pay me for that? No, it's me, myself. So it is not a derivative, okay. which are settled in cash. Such contracts are usually accounted as a derivative if it's a situation. However, contract for which an entity's own use is their own use. Yeah, therefore the contract which qualifies the own use, because the company always takes the delivery. That means it is out of the scope of IFRS 9. So we cannot record it as a derivative. So what is this contract? So yeah, students, this contract is known as executory contracts. So what is executory contract? Yeah, if you will understand it, I'll explain you again. Yeah, the contracts over here is an executory, means executory contracts are not initially recorded in your financial statements unless until they have occurred. Or you remember there was one contract which was known as onerous contract. Yeah, onerous contract. What was onerous contract? If I go ahead with this contract, there is also loss. If I don't go ahead, there is also loss. Means if I don't go ahead, I have to pay some cancellation charges. Yes, that way. So over here, it's basically that contract. Okay, I'll just book it over here for the answer. So this contract is also known as the executory contract. So yeah, this is known as executory contract. So executory contracts are not initially recognized in the financial statements unless they are onerous. Unless you get what? Unless they are onerous. Unless they are onerous. So yeah, see, I'll explain you with one thing. For example, there are certain contracts. For example, if I just made a contract with my tenant, yeah, like okay, you stay for in the lease premises for 11 months. Okay, for example, if he vacants up, maybe still he has to make the payments only. For example, if it's a contract for 11 months, if he vacant at 6th month, I may be telling him, okay, no. If you vacate at 6 months, still you have to pay me for 11 months. Still you have to pay for 11 months. So at times that executory contract becomes the onerous, means a loss-making contract. In the questions, in the class I have did one question. If you remember, okay, if you purchase the chemical and if you sell it, that is a loss. Okay, you sell it at a loss. But if you cancel the contract, still there is a loss. So which is lesser loss? That much lesser loss provision we can book. Yes. So over here, if it's an onerous contract, yeah, I have explained onerous contract. If it's an onerous contract, we can book a provision for that. So this is particularly a contract which is not unlikely to be onerous also, because wheat prices may rise again. If it may rise again, then it is a profit making contract which is not yet sure. However, the finished goods which the wheat forms a part will be sold at a profit, maybe. In the upcoming thing you have to sell it now. So right now please don't do it. So what you did it, you have booked a liability, please de-recognize it and book the profits. So by looking at these two things, here also you booked a loss. Here also you booked a loss of 0.5. So why you would have booked this? Maybe, just imagine, this is 20x7. Even after booking a loss, the question has told us that the person is satisfying whatever the prices are. Wait, I'll just show you where it is, that question. The company is satisfying all the criteria and they're getting the bonuses also. Yeah, can you see? See, she noticed that the provisions in the balance of 20x7 are higher than the previous year. She made the changes. Who explained why are these changes basically? Okay. And later on, she has recognized, okay, there was a question like, I don't know where I did saw that one word. Yeah, in the next year, the things are going to get changed. Yeah, just let me just see. Yeah, that's so big questions now. My eyes like comes up. So yeah, basically, why would have they did this? Maybe just to inflate the profits, Yeah, sorry, deflate the profits. Unnecessarily they'll book the expenditure, so they don't want to pay the taxes. So that could be the reason they would have shifted this. But being a proper accountant, it is not allowed. Unnecessarily whatever you want, you can do it, right? So it's important to book it at a proper pace. Yes, okay. Is it clear? Yes. Yeah, I wanted to read this. The company has performed in excess of the targets in the year ending on 31st December, but the financial forecasts are esteemed pessimist. Why they would have did this? Instead of putting so much of losses in 20x7, still they are able to manage the targets. Means the person will be definitely getting the bonus. He has already set the targets, even after booking so much of losses. So that maybe in the future, in the next year, when this thing will not be at a situation, I will shift my current year's losses into that year. So maybe in the next year I can book profits. So that in the next year also I get bonus. Again. In the current year, in spite of booking so much of losses, the director is able to get, whatever the person is able to get the profits. If he is able to get the profits, is he able to get the bonuses? Don't you think he's trying to shift his profit to the next year? Yes. By overestimation of liabilities and underestimation of assets. Or by overestimation of liability and underestimation of profits. So it's not allowed. Clear? Did everyone understood this? Yeah. Can I explain? Can I go ahead with the solution? Yeah. Yeah. Can we make the solution? Yeah. I'll present the solution for us, guys. Because what is present now? What's remaining? Oh, ma'am, we have to book for ethical implications also. So if I just talk to you about what is ethical implications, is it everything fine? Or like whether they have made anything wrong? Yeah, ma'am. Ethical implication. Have they did your financial statements? Have they recorded as per IAS 1? Have they presented it and perfectly they have made it? No. You have to clearly see ethical issues over here. Ethical implications says that the users of the company, to whom will that impact? So yeah, so they have to write the use, because there was a question, you remember, some going concern is also getting affected because of all such stuffs and all. Yeah, so they have to write it when the prices will increase. Yeah, there was a lot of things there they have given it. Yeah, the finance director was arguing and they were feeling like it will not be a situation, and it is ensured that going concern is going to get affected, all those stuff. So we have to write that way. The user of the company, such as banks and shareholders, trust accountants and all, rely on them faithfully. So it's better IAS 1 needs to be presented correctly and carefully. So over here, if you can see both the errors made by the company, yeah, it is both the errors. I think like, is it intentionally or non-intentionally? Yeah, and like at times now there could be intentional errors also. And if it's IFRS 9, I know there could be some unintentional errors also, which can affect it, because this IFRS 9 is not so easy. So if it's not so easy, definitely there are huge chances that people may manipulate things. Yeah, people may manipulate things. So here this needs to be my answer. Both the errors of the company are doing what? Yeah, this line should come. Overstating the liabilities and understating the profit. It is possible that these may be unintentional errors. Okay, if it's possible, if it's unintentional errors, because the people are having lack of professional competency. Now this word should come, professional competency. Yes. However, the incentives exceeding from this IFRS, mostly notable the bonus scheme. So what happened over here, if you can see, the bonus of 2027 has been excluded. Why? Because the bonus has already been given. Bonus has already been given. That shows what? There is no like there is no doubt only for the current year. It's already there. But I doubt for the next year. To be proper, I want to shift my profits. Yeah, there could be the attempt of shifting the excess profits to the next year. This can be the reason, so that in the next year also I can reach my bonus. Yes. So this is what, these would demonstrate the lack of integrity. So yeah, Sukanya ma'am, we have already did with the words. Yeah, do you remember? Yeah, we have already completed about the ethics and conducts. So what was ethics and conducts? Yeah, so we have to take the professional care, integrity, yeah, objectivity, care, yeah, it should be proper behavior, right? So it needs to be PCOP, right? Yeah, it needs to be professional, it should be integrity, yeah, it should be objectivity, it should be like competency, and it should be a professional behavior. So all these things we have to write a proper word. So over here, it's my professional competence. It becomes my first word. Over here, my professional competence. Over here, it needs my integrity. Over here, the people is not having a proper integrity, lack of integrity, and all that stuff I can write it to prepare. Yeah, it has breached the ACCA's contract. That's all. Is it okay? Is it okay? Clear? Are you fine? Is it clear? Yeah. Yeah, students, just tell me once, are we good with it? Solely then I'll go ahead with the third question. Yes ma'am, clear? Okay, cool. Yeah, we can go ahead with the third question. I'll just open up. The third question. Before that, I'll just close this thing. No, I don't. You. Yeah. Don't want to save it. Okay. Yeah, ma'am, this is what I personally feel. It's not always all people will feel the same. I am the one who feels section B's question easy. Section B's question comparatively easy. Maybe you also might feel the same. So I want you guys to do whatever questions you are more comfortable with, okay? Yeah, why it's not visible? Protected view. Yeah, just give me a minute. It's not coming up. It's telling me that it's a protected view. But why protected view? I am not going to do anything unprotected here. Just give me a minute. It's there. Okay. Yeah, cool. Chalo, yeah. Yeah, so students, what I was telling, I feel like section B's question is pretty easy. So yeah, it's upon us that whatever question we feel more better, we can start writing from there. So yeah, without any further delay, we'll be having a lot of stuff in that. We'll be having a lot of exhibits. First and the foremost thing, see the requirements. What's the requirements? The accountant requires the advice about whether the accounting treatment from the sale of development project is correct or not. Development project means when it's development I get one idea. Ma'am, it can be IS 38, it can hit. Okay, something about development for 6 marks. The accountant wants our advice about the correct treatment for aircraft. Aircraft contract. Contract means, ma'am, is it IFRS 15 contract? Let's see. With a reference to materiality concept. Materiality means importance. And this materiality is what? Yeah, it comes from the concept of current issues. Yeah, like whatever I feel. For example, if in Reliance Industry there is a theft of 1 lakh, people will not feel that the company is worst. But if in my company, if there is a theft of 1 lakh, people will feel definitely your company is not safe. So it depends upon the judgments of the people. So you have to answer the IFRS practice to making the judgments. Okay, and that will give me good marks. Okay, easy. So the first question over here, it's something about the sale of development project. So yeah, I'll start formulating the answer. But before that, yeah, you will say, okay, ma'am, please read the questions prior to that. Yeah, for that, let us read it. Yeah. So the calendar company has a reported year end on 31st December 2087. Okay. It prepares its financial statements with IFRS standard. Okay. Over here, what happened? The company develops a bioproduct. Okay, biotech products for pharmaceutical company. So it's something like pharmaceutical company. These pharmaceutical companies then manufactures and sells the product. Okay, so what are they dealing into? Yeah, it shows like they are into the production and sale of the medicines and all. Okay. The company receives stage payments during the product development and shares a royalty when the final product is sold to the customer. Please keep this word into your mind. The company receives stage payments on payments, like whenever it's done during the product if I'm developing, because if it's a pharmaceutical thing, we have to produce some of the other new medicines. So I get the stage wise how it is done, and the product development, and we get a share of royalty also. Okay, so I get royalty if I share some patent. Patent means some formula to some other people. Okay, cool. A new accountant has recently joined the company and has raised a queries. Yeah, always a new accountant will come and they'll only ask the questions. For example, yeah, the following exhibits are there. The first exhibit, the development project. Yeah, this is what the first exhibit. We are asked about the question about the development project. Okay. The development project provides information relating to sale of the development project. So yeah, without any further delay, we'll just read about the development projects. During 2086, so which is my current year, my year completes on 31st December 2087. So yeah, they're talking about previous year maybe. Yeah, just imagine. During 2086, the calendar company acquired a development project through business combination. What's the meaning of that? The company has purchased something, and for that they have applied IFRS 3, right? So is it something they have self-made? No. If it's an intangible, I can purchase it. Okay. If it's purchased thing, yeah, we record it. If it is self-made, it's not recorded. IS 38, you need to know, which says intangible assets are some assets which are identifiable asset, which I can separately find it out, which can be sold and purchased. So yeah, this is purchase, business combination. And they have recognized as an intangible asset. Cool. The commercial director decided that the return made from the completion of the specific project would be suboptimal. Means it's better not to return that. It's not so true. Okay. As such, in October 2027, means in the current year, the project was sold to the competitor. Okay. So they sold the project. So if you remember, if I'm having some intangibles, I record it. Yeah, as per the IS 38. If I want to make a sales, if I'm getting any profit, where it goes? Yeah. Let's read it. As such, the project was sold to the competitor. The gain arising from the sale of the intangible was presented as a revenue. Is it your income? I want the answer. Is it your income? Is it your revenue? Are you engaged in daily dealing it? Ma'am, revenue means something you are daily engaged in doing so. For example, ma'am, ordinary course of an action. It's not my ordinary course of an action, ma'am. No, not at all. So yeah, it's not your ordinary course of an action. The gain arising on the derecognition is not your ordinary course of an action. And you did it in the ordinary course. Mad people. Yeah, not to do that way. So what happened? The gain arising on the derecognition was been accounted as in revenue for the year ended on 31st December 2007 on the grounds that the development of the new project is one of the calendar's ordinary activities. It's not the normal ordinary activities. The calendar has made 2 similar sales of development in the past, but none since 20x. Okay, that shows since long time now you have not sold like these things. So can that be ordinary? Ma'am, it's not. IFRS 15 you cannot apply in this. IFRS 15 will not be applicable. So what they have asked us, please answer. The accountant requires your advice. Yeah, whether the treatment of the sale that the people have made it is correct or not. What do you think? Is it correct? Yeah, Sukanya ma'am, is it correct? Silsa ma'am, from where it will be correct, isn't it? From where it will be correct, ma'am? It's wrong. It's wrong because they are not in the ordinary phase of an action. But yeah, I think some ordinary thing will be what? I think, ma'am, the stage payments and all. Yeah, you remember they were making some they are selling some royalty day to day, like they are making the stage payments. That can be their normal course of an action, but not this sale. So yeah, we have to write it as per 3A1, the answer which is there with us, considering IFRS 15 also and IS 38 also. So yeah, this is my answer for A1. Okay, I'll just book it like that way. Yeah, sale of an intangibles. What is first of all IFRS 15's meaning? It defines revenue as an income arising from the ordinary course of an action of the activities which the company has. My company's ordinary activity is not involve selling in the development project. No, Baba, it's not that. In fact, the company has no made so much sales in 20x. Yeah, so they have told in the last line, you have not made the sales since a long time. So it's not your ordinary course of an action. It would seem that the calendar's business model instead involves developing projects and products for its customer, who then produces it. Means I'll be involved, I'll be having a model which produces the product, develops for my customers, who will then make the production. Means I can help them, but it's not that I am going to sell that thing, which is very normal. No, but obviously my stage payment and royalty can be my incomes. Okay, they can be my incomes which I have arrived at. So yes, whatever I have returned is not correct. Okay, it's not correct. So if it is not correct, then what is correct? Yeah, what is correct? Yeah, even that needs to be perfect. On the basis of that, the calendar's accounting treatment, is it right? Is it right? They have asked us, is it correct? So I'll say no, it's not correct. So it's incorrect to recognize the gain as a revenue. It's incorrect. Yeah, it's incorrect. In fact, we would want you guys to recognize it as per IS 38, which explicitly prohibits the classification of gain on recognition of an intangible asset as revenue. As a widow, it's not allowed. It's not allowed. So okay, if they have asked us for a good marks, so obviously we just cannot like ignore like this only. We have to write properly what is IS 38. So IS 38 says that it's an intangible asset, means it's an identifiable non-monetary assets which are like not something which is held for sale. If you are having some inventory which is held for sale, so yeah, ma'am, IS 2 will be applicable and not this IS 38, right? Yes. So if you see the way they have presented it over here, it's also very easy. So they have written over here. So IS 38 defines an intangible asset as an identified non-monetary asset without the physical substance. Over here, the intangible assets held for sale in the ordinary course are not IS 38, they are as per IS 2. The fact that the development project was classified in the intangible asset upon the recognition is also not proper. It's not held as for IIC. Easy, clear. So you have did a misconception, it's wrong. Yeah, clear, easy. Yeah, can we go ahead with the second point? Yeah. Okay, yes. Yeah. Now they have asked us something else. Let's see what is the second question they have asked. Actually, they have asked us the accountant requires my advice, okay, to correctly account for the treatment of aircraft. Okay, about aircraft. Let me go ahead and write the second answer. Aircraft, what was it? Let's read what have they asked us in the... Okay, so first project we did it of development. Now a lot of stuff is given for aircraft contract also. So let's see. Why? Okay, when I'm reading this aircraft thing, I want someone to please give me the standards number. Okay, I want Sukanya ma'am your answer from the standards number for sure. Okay, so yeah, you are only there with me, so definitely we'll take care. Okay. While searching for some invoices, the accountant found a contract with the calendar has entered into... Okay, so while searching for some invoices, the accountant found a contract. Okay, the accountant has found some contract with the company that has entered on which date? On 1st Jan 2021 with a dairy, another entity. So okay, there is a contract with another company also. So they have found that the contract allows the company to use the specific aircraft owned by the dairy for a period of 3 years. So it's a contract to use. Yeah, it's a contract to use for 3 years. Yes, to use the contract. Okay, so calendar is required to make the annual payments, which is very clear that which type of contract it is. Yeah, which type of contract it is. Yes, very clear. Yeah, it is the leases. Yeah, maybe you don't want to purchase, but if it's more than 1 year, it's more than 12 months, so you don't get the exemption, you have to book it. Okay, cool. What have they given? On 1st Jan 2027, the costs were incurred negotiating the contract. Okay. Obviously, there will be certain costs which the lessor and the lessee may have. So the first annual payment was made on 31st December 2021. So basically at the year end they have to make it. Both of this amount has been expensed to the statement of P&L account. Okay, I think this should not be done. You cannot put in the P&L account. Everything you cannot put it. You remember what I find the present value, present liability. Present liability is interest element only I book to the P&L account. But whatever I make the payments, that is my reduction from liability and not the P&L statement. Yeah, it is like liability account debit to cash. It's not P&L stuff. Okay, let's see. There are contractual restrictions. Okay, cool. See, but still, the person is having what? The calendar is having the right to use the asset. Cool. The person is paying the payment. The company is paying the payment also. There are contractual restrictions concerning where the aircraft can fly. Yeah, I told you in the class also. If I told you, okay, you cannot go beyond India, etc. Okay, it's a protective right and not the substitution right. Okay. Subject to those restrictions, the calendar determines. But who determines? Achha, my company only determines when and why and when I want to use it. Okay. So that means it's an ROU asset, right? And the cargo and the passenger whom I want to transport. It's an ROU asset. My lessor permits me, okay, it's permitted to substitute. Achha, you can substitute, you can come and substitute. He can substitute the aircraft at any time during 3 years, but for why? An alternative model and must replace the aircraft if it is not working. Okay, if the condition is bad, then you can come and substitute. That does not mean that you have a substitution right anytime you come and take up my asset. No. It's just because if there is a problem, you can come up and take up. Okay, any substitution aircraft must meet strict interior and exterior specifications. Okay, cool. And there are significant costs involved. Cool. Which our company has to meet. Okay, it's okay. Why? If I want something, so maybe regarding that, if I have to do some expenditure, I am able to do it, I will do it. Yeah. So what have they given in the question? I think it's very easy question. It's a cash question. The accountant requires advice for the correct accounting treatment. Yeah, so what's the correct accounting treatment? Yeah, so we can write it like, yeah, ma'am, this is basically as per IFRS 16, right? So what is IFRS 16? Yeah, so we need to know it's basically the right to use the asset which the lessee has, If the lessee has the right to use the asset, they can record it as the leased thing, right? And in the financial statement, they will be recording at one point of time ROU asset, and another way they'll be recording as per lease liability. The ROU asset needs to be depreciated over a period of years. Over which years? Either the life of the asset or the number of terms, whichever is less. And if it's a lease liability, what I need to do? I have to figure out whatever are the lease payments for number of years, bring it to the present value, add interest on that, then reduce our liability by actually making the payment and get the closing liability. Yes, ma'am, very clear? Super? Yeah. So now everything, ma'am, is to be written. Isn't it very simple? Like, I am in the love with this question. Like, it's allegedly free marks for those who have completed the IFRS with me. So I am so sure. I am so sure. Yeah. Sukanya ma'am, is it not easy? Oh, hey, what happened? Is there any problem? Yeah, so IFRS 16 says, yeah, it's not allowing me to copy. Okay. IFRS 16 says that there is a contract. The contract must be lease if it conveys the right to use and control the asset. Like what? It's an identifiable asset. Means, yeah, only that asset I want, not anything else. For 1 year, 2 years, 3 years, ma'am, for specific consideration. Write the definition. Simple. Write the definition. When deciding if the contract is the right to control or not over here the asset, the customer has to assess what? Whether the company is having all the substantial economic benefits. Yeah. If the customer or the lessee uses it and gets all the economic benefit associated with them, yeah, it's their control. Then they have the right to take all the decisions. Yes. But yeah, if the like the lessor comes and says, okay, give me your asset because it is like bad or repaired, okay, that does not mean it's a substitution thing. Yeah, it's okay. If there is any problem, okay, for that purpose they have taken up and they'll return me another asset. And if they can keep the protective rights that you are not supposed to grow from here to another country, okay. That does not make it's my protective or like it's my another right which the company does not have. Okay. Now we can write like that. The company over here, the calendar company, my company is having the asset, right? If they have taken up the asset like that way, the calendar has the right to use the asset for 3 years and they have to make the payments. Although the lessor can substitute only if what the things are very bad. The cost of doing such prohibition may be restrictive outline. So basically it's not something which is like not proper. Okay. Now if you just read it above, it says that there are certain protective rights and not the, which right? Not the, yeah, it cannot be substitution right. And protective rights never means that you don't have the authority. Okay, you don't have the authority. So calendar over here appears to have the control over the assets for 3 years because no other party can use it. Okay. And the calendar can make the economic decisions also about where to go, which destination to go, whom to take, everything. There are some legal contractual restrictions that you cannot go away, but these are my protective rights and not the substitution rights. Okay. So that never means ke acha bichare unke paas to like they don't have the right to use only the asset. No, it's not that way. Okay, it's not that way. Okay, moving ahead, we have to also write ke if this my company is a lessee, how will he record in his books of accounts? Okay, so for recording in his books of accounts, what I have to do, based on the above things, I have to record it in my financial statements. So how will I record it? So based on this, I have to first say what is lease. Yeah, so about this contract, yeah, is it a lease? Yeah, it's a lease, ma'am. Clearly it's a lease. So IFRS says that if you don't want to account as per IFRS 16, normally rental expenditure you can do as per IFRS 16, which is lesser than 12 months. Yeah, we know. Or it can be low value asset. Yeah, I have explained. However, this lease contract is for 3 years, which is not a short term. Exactly. So yeah, even it is a high value item. So obviously there is something you have to record it. So what things will you record it? Yeah. So we'll record it, the lease liability. Just try to understand, guys. Just try to understand. The lease liability should be recorded. And where I do record my lease liability? Ma'am, lease liability we will record at the present value. Agreed? Yes. Using the discounting rate. Then what we have? We have the finance cost, means interest I will add it. If I am adding interest, it will be charged to P&L account. Yes. Last, the year-end cash payment, if I am doing it, what will I do? I will reduce my liability and I will pay cash in it. Yeah, that is something which is about my lease liability. But if I tell you, okay ma'am, I'll be having something else also, which is known as, which is known as my amount of the ROU asset. Now, how will I record ROU asset? Simply, ROU asset is also to be recorded at the same way how I record my lease liability, present value, and on that I'll put the depreciation, which also needs to be charged directly into P&L account. Is it not simple? Yeah, very simple, very simple. So yeah, that is also some stuff we have to record it. Yeah, so you can read it. The ROU asset should be recognized at the date of inception, equivalent to the amount of the liability. Yeah, plus any cost if you have incurred it. And last but not the least, depreciation also to be charged. And yeah, that should be charged in P&L terms. Easy, very easy. Yes. Yeah, ma'am. Easy. Yes, Sukanya ma'am, I think it's very easy. Like, we are very well with these concepts, I know. I'm pretty sure that we are very good with these concepts. And yeah, this is the most easiest point, yeah, which we went through. Yeah. Yeah, chalo, we can go ahead with the last point which is there in the question about the materiality. So yeah, what is materiality? In the question it was asked something about materiality. So we are well with the concepts. We know that materiality is something which the individual company can have it on its own, right? On its own. They can think, and it is not something which is what I can say. It's a return somewhere in the books of accounts. You know, if it is more than this, only then it is material. No, not that way. It's upon the individual people's own judgment. Okay. Cool. I'll just read the last question, what they have prepared it over here. With the reference to the concept of materiality, please give me the recommendations. Okay. So is there something else? Yeah, ma'am, the last exhibit is pending. Small exhibit. So yeah, I just need to know the chats. I'm just figuring it out. Yeah. Okay. Cool. So the accountant's recommendation says that the new accountant has been reviewing the process. So she thought and she recommended me that all the purchase of the property below $500 should be written out to P&L account. Hari, what she was thinking, you know. Yeah, just give me a minute. Yeah, so actually what my accountant was thinking, hey, there are low value assets now, please book directly into your P&L account, write it off. So everybody has its own materiality. For somebody $500 is material, for somebody $1 lakh is also not material. Okay, that can happen. The accountant believes that this will significantly reduce the time and cost involved in maintaining it. Why? Maintaining the financial records. If you are already recording assets and all with a low value also, on that also you charge depreciation, etc. So she thought that let it be now, we will put directly into P&L account. Okay, they wanted to write it off. Cool. A checklist should be used when finalizing the audit, the annual financial statements, to ensure all the disclosures are made or not. So she told that please ma'am, make the checklist so that nothing is left off. Okay, cool. So in these, ma'am, what is the thing that you are thinking like it is hitting on concept of, yeah, if it's a PPE means, yeah, definitely IS 16 they'll be asking. But yeah, we will be first putting up the answer for materiality concept. So yeah, if the answer is for materiality, I will start preparing the answer that way. Yeah. The materiality means what? Yeah. My company should prepare the financial statements which should help whom? Yeah, the lenders, the creditors, etc. to take the decisions properly. Simple. For all the people to take up the decisions in an economic decision. Yeah. An item of material means if you feel this item is very material, which if you don't include it, can affect the mind of the readers. So it's importance, it's relevance. So an item is material if its omission or misstatement might influence the decisions making. Yeah. And I cannot say, oh, see ma'am, it's 500 se zyada, 500 se more. It cannot be quantitative. It's not subject to quantitative. Like for me, some X amount can be material, for somebody else, Y amount cannot be material. So the materiality is not purely quantitative consideration. No, it's not a quantitative consideration. It's not. Okay, it's not a quantitative consideration. So an item might be material for somebody, for others it may not be material. It depends upon some non-compliance with the laws and regulations, and yeah, they have to consider it. But the company considered materiality to ensure that the things are not omitted, misstated or obscured, means they have not been chori nahi ho gaya, there is no some theft, there is no misstatement. For that, what things I have to take care? For the first answer, about PPE. So, is there any sort of concepts? If it's lesser than 500, please do not record it. Ma'am, no concepts. So, as per IS 16, says the expenditure on the PPE should be recognized as an asset and initially measured at cost. Writing off to P&L account is therefore not as per. Like this way, things are not there. If you have assets, go on recording in your PPE and not nothing like that way. Cool. So yeah, this is something which is involved. Up next, if you remember, we have one more concept which is given up in the question, that yeah, do you think any changes or if there is anything omission, which standard it can impact? So I normally want to prepare my financial statements considering the overall perspective. Like I just will not be at a proper position if I do like IS 8, if I ignore, for example, if I have some misstatements, yeah, errors, or like that way, accounting policy change in material misstatements and errors. So what it is, I have to record it as per IS 8 also. Yes, that shows up me that way. That accounting policy changes in estimates and errors says that the financial statements, if the financial statements do not comply with IFRS, they contain many material errors, misstatements intentionally. Why? Because maybe I want my company's position to be somewhere else and my position is not somewhere else, but I want to look like it is somewhere else. Yeah. However, assuming that the aggregate impact of writing off small PPEs to profit and loss, it is looking like it is not material, yeah. But just think, if I'm having 50 PPE, if I'm putting it, maybe then it will be material. Like one PPE may not be material, but if I have more, then it may be material. Then the financial statements will be compared. Moreover, this decision seems to be practical expedient, which will reduce the times and cost involved rather than the decisions of taking it for the financial statements. Okay. So yeah, if implemented, we have to reassess whether it is not materially misstated. Like if you think it's professionally okay, you can make it. But again, please check that by doing this, you are not materially misstating your financial statements. Clear? Is it fine, guys? Yeah, Sukanya ma'am, was it easy? I feel the most easiest parts are this. Yeah, allegedly, the most easy things are this. I'm just figuring it out and waiting for you to reply. Okay, I'm having one more participant with us. So yeah, you know, for me it becomes difficult because I don't understand who is there, na? So I just cannot record the names. No worries. Yeah, are we cool? Are we comfortable with this? Can I go ahead with the last question which is pending, and again that is also very easy question. Yes, 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 if you say, I'll go ahead. Or do you want a break? I can give a break also of 2 minutes. Like I was not expecting so much of time, but it eventually took. But nevertheless. Yeah. Yeah, can I take a break of 2 minutes? Yeah, let's take a break of 2 minutes and we'll resume it back. So like by 4:30, so I'll definitely complete it. Yeah. Okay. Yeah, let's just take a break of 2 minutes. Bye bye. Yeah, welcome back, ma'am. Yeah. Hello. Oh, I'm telling hello, but I don't know why it is not visible. Shit, it was visible right now. Yeah, cool. I'll just open it for once. Yeah. Just tell me now, question number 4 is visible. Yeah, I think it's visible right now. So yeah, it will hardly take now 15 minutes because it is again very small question. Yeah, it's easy also. So then yeah, after completing the yeah, just let me see. Yeah, I think Sukanya ma'am, yeah, we are there, right? Cool, cool. Live chats. Yeah, visible. Okay, okay, yeah, ma'am. Okay, cool, cool, cool. So yeah, after completing this paper now, you have to write in the chats like or whatever it is. You have to write, or maybe you have to write in the comments also. Like section A was pretty easy or section B. I feel like section B is easy. Let's see. Okay, cool. So question number 4, the last question for the day. So there is a company, Kiki Company is a public limited company. Okay, it designs and manufactures children's toys. Yeah, yeah. So for you guys, they are preparing toys. Okay. So for you all, they are preparing toys. Seriously, not for me. Okay. So yeah, it has a reporting date on 31st December 2007 and prepares the financial statements as per IFRS. Okay. The following exhibits are given, and they have given 3 exhibits. Cool. Some gifts card. So if it's a company which prepares some toys and all, so maybe they'll be having some gifts cards. So cards will be there. Some they'll be preparing some things. So for that they'll be having some royalty also. So let's say royalty fees, and maybe they'll have some property also. Cool, which they have figured it out for IS 40. Okay, let's without reading this go ahead to the requirements. So simple requirements are there. First, the director of the company has advised you to say how the revenue is to be booked for the year end for gift cards. Gift cards. Okay, simple. Yeah. So I'll start preparing the solutions, which is very, very, very easy. For what? For the gifts card. So without any further delay, let's read what was about gift cards. So gift cards means the Kiki over here, the company sells what? Gifts cards. Okay, they sells the gifts card at the rate of $50. Okay. This can be used while purchasing any Kiki's product through its websites. Okay, do you know one concept which is coming up over that in the malls and all, if I go, do I get some coupons? Yeah, I get some coupons, right? If I have that coupon, maybe in the future purchase, if I'm purchasing from some website, I get certain discounts. Yeah, for me it's a good thing. But what about the companies? Initially, $50. What I paid them. I am the company. So maybe some customer paid me $50. I have to see whether can I book the revenue today 50 ka 50 pakka, or is it something I have to redeem? Maybe if somebody accepted that card and if they redeemed it, maybe something else will be the situation, because today I have to give something on free, right? Yeah. So what have they gave? Acha, the company gift card, they have given it for $50. Like in some of the hotels, like I normally have a voucher or the coupon, which I can say I get for $500. I get the coupon for $500, which says if you have that coupon, you get 1 plus 1 free. Oh, etc. etc. things. So are they supposed to book everything today itself, or they'll be having some obligations? So what they have written, the gift card expires after 12 months. Just within 12 months, if the purchaser does not purchase it from the market or from the website, sorry, the card will get expired. Okay. Based on the past experiences, my company estimates that, oh my god, 70% of the customers will redeem that card and they'll value the gift card. But 30% of other people will not use it. My company does not have any requirement to remit or read. Okay, now this is important. The customer do not have any requirements to remit any unused funds from the customers. Means if some customer have purchased $50 ka gift card, if he is not accepting the if he is not purchasing from website, the company will not then again pay me. Okay, you have not, it's a refund. No, not that way. So what have they given us in the question? The director requires you to advise and give the amount, like how will the revenue be booked about the gifts card. Okay, simple, simple, simple. First, about the revenue, we know the concept IFRS 15 comes into picture. Yes, if it's IFRS 15, what it is? It's a revenue from contract with customers. It says that when should a revenue be booked? You remember that 5 stages? Yeah. Identify the contract with the customer. So yeah, there is a contract because it's a card, which is a contract. Then you have to know, once I identify the contract, I need to know how many obligations I'll be having. Let's say over here I'm having some obligation, but in future if you redeem that card, we have to give you some or the other way, discount or whatever it is from the websites. Then allocating the transaction price. Over here it's a transaction price of $50. Then I have to allocate, get the transaction price, allocate, and finally book the revenue over the period of time, at a point in time, or over the period of time. Yes. So it's important to know when this obligation will be over. So for example, we have to start writing like this. So revenue from the contracts with customer says the revenue should be recorded when or as a performance obligation is satisfied. Means when is the performance obligation satisfied? At the time you have to book it. So when and or where the performance obligation is satisfied, where I have given the goods and services to my customer. Okay. When should I book? What do you think? When should I book? When the customer actually purchases the toys. Okay. So over here they have written, when a customer buys a gift card, they are prepaying for the products. Oh, this is the important word. Isn't it? They are paying, like maybe they'll purchase it later on from the websites, but they are paying it today itself, isn't it? Yeah. The revenue cannot be recorded because the entity has not yet transferred the control over the asset. I cannot record it because till date, see, if I record the revenue, in future I have to do some obligations, means I have to sell the goods. Have I sold the goods today? No, I have not sold the goods. I have not sold an asset, and so has not satisfied the obligation also. As such, the cash receipts today should be initially recorded as a contract liability. You remember the word? It was something like a warranty. I'm just trying to explain you, like warranty. Today if you have received the money, today if I have received the money for warranty, I don't know, na? Maybe in future I have to like incur the obligation. If it's a warranty thing, I have to go and repair things. Yeah, sure. It's something like a warranty. So over here, IFRS 15 has recognized this word in a different term. Yeah, it's in a different term. Just try to understand it. IFRS 15 refers to the customer's unexercised right of breakage. Means, what if the customer did not exercise the right? We know 70% of the people will actually purchase it, but 30% people will not purchase it. So how much revenue can I record? It's just like they have not clearly given us. So it's simple, but then try to understand it how they have presented the answer over here. So IFRS 15 refers to the customer's unexercised rights as breakage. The guidance for variable consideration is followed by estimating. So what's variable consideration? See, is it something which is very true? Did I got the transaction price? Yeah, ma'am, $50 is for sure. But how much? In other words, the expected breakage is included in the transaction price if it's highly probable that the significant reversal will be there. That is, on the cumulative revenue which I have recognized today will not occur uncertainty. Means if this thing will not be possible, like if everybody did not exercise it or if everybody exercise it, maybe that will not be my revenue. This means that if the company is unable to really estimate the amount, then the revenue for the unused portion of the gift card is to be recognized when the customer is sure that it will be like the remaining rights will be acceptable or not. For example, over here the entity is able to get it amount with the proportion, like I'm getting a proportion, like 70% will use, 30% will not use. So how much can I book? You can understand like this. For every $1 person who redeemed it, yeah, for every one redeemed, yeah, for every one redeemed, how much can I book? For every one redeemed, I know it's like 70% you can book it. Like, so you just try to understand it. Okay, for $1 you guys get how much amount? You guys get, just try to understand it. Yeah, for every, like 100:70 is the situation, right? So for $1, am I getting 70%? Yeah. So if, oh, just a minute. So I need to know how much can I redeem it. If it needs to be 100%, if it needs to be 100%, what will be the amount of the revenue which I should book? So it's just the reversal. So I can do like 1 into 100 divided by 70. So it's like 1 divided by 70%, like that way. 1, you can do like that. 1 divided by 70% in your calci, 1 divided by 70%. So it's coming up to like 1.28. means the revenue which you get it for 1 is something around like you have to recognize it for 1.43. Means in relation to it, it appears that the amount of breakage can be reliably determined. So this needs to be recognized as a revenue, okay, which can be redeemed. Yeah, this is the concept which is there, not in the course. I have not seen it, but yeah, if it's there, we need to book it that way. For example, for every $1 redeemed, the recognition of the income should be 1.4. Why is it so? Just try to understand. I am getting $50, right? I am getting $50. Do you think it is that much revenue? No, if you really want that much revenue, some expenditure of warranty you also have to do, right? Some expenditure of redeem you also have to do. So 50, if I'm getting it, definitely it is just the 70%, because 70% you have to redeem it. So if you take 50 divided by 70% means you need to get an income of 71.42. You have to book a revenue that much, so that actually you can redeem it for every $1. Clear? Easy? Yeah, not that much easy for sure, I know. So that's the reason I have taken up this paper, because there are certain 2-3 concepts which I felt like it's new, so I just took it that. But still, it's something which is manageable, not that difficult. Now, what about the second point which they have talked about, the royalty? Okay, what about royalty? Yeah, what's royalty first of all? Like if the customer, if I'm selling up the royalty, for example, yeah, if you can see this, they are having some books, they are preparing some books, and for books they are doing what? They are selling up some patent and all, some copyrights, that they are charging something else. So is it their normal course of an action? Can they book that way? So yeah, let's read it. Yeah, okay, cool. Yeah, the Kiki's best selling ranges of toys is called Scary Mon or whatever. It's not, I don't know. So basically my company's best ranges of toys, whatever best selling, whatever I'm selling it the best, that is something XMO, like the Scary Mon basically. In 26, the color, another company, okay, another company, I'll book it with blue color so it will be clearly, oh, green color, yeah, okay. There is another company, another listed company has entered into contract with my company for the rights to use the like if it's a Doraemon, so yeah, they are using the characteristics, they are using the characters like Nobita, Shizuka, everyone. So over here also there is Scarymon, I don't know, basically. So they are using the rights to use the characters and imaginary in the comic books. So okay, what happened over here, there is some another company, there is Color, okay, they want the rights to use their characters, okay, fine. The contract, yeah, so if there are certain rights which the company wants, so we need to make some contracts. So contract term states that the Color, the other party, has to pay Kiki, so they'll pay some royalty fees for every issue of the comic book which is sold, okay. For every comic book which you are making a sales, you have to pay me royalty, cool. Before signing the contract, my company determined that the Color has a strong credit rating. Yeah, we know that that company is very good, and I'm so sure that they'll be paying me amount. But later on there could be a situation, if it's a strong credit rating, maybe I'll tell them, okay, you can pay me later also. Maybe I'll give some credits. So what happened? Throughout 2006, the Color provided Kiki with the monthly sales figure and paid all the amount which was agreed. Okay. So in 2006, they were very good. The Color used to pay all the time money. So they were paying it properly. But in the 2007, the Color experienced a cash flow problem. So they are not expected to pay. Okay, cool. So they were expected to be having a short-term money. Money was a problem. They were not having a financial crunches. They were having financial crunches. So maybe they'll not be able to pay, etc. etc. So Color made nominal payments to Kiki. Did they made an actual payments? No, they just paid nominal amount in relation to the comic sales for the first half of the year. So do you think Kiki can record it as a revenue? So we know the meaning for revenue. If I want to record revenue, it's not like a charity which I told you. You should get the commercial substance. Over here I feel like doubt. I think like will I be getting or not? I'll let to read it. So at the beginning of July 2007, the current year, half of the year is done. Only for half of the year I got the payment. The Color, the company lost the access of credit facilities and had has several major customers. So Color discontinued to sell the things. Online comics also they didn't sell, like whatever. And they also didn't make the future payments also. Oh my god. That means, just to summarize it, over here, my my company is Kiki. So Kiki is just selling up the comics. For comics, now they are selling up the characters. Okay, can use my characters. For that, the color is making them the payment in the name of a royalty. But for initial terms, they were making it properly. But after 1st July, their condition was very bad. So now they are not even purchasing, not even paying, nothing. So they are not even selling their comics also. So can my company book the revenue for them? To be very frank, no. Why? Until unless I recover the things, I am not at a position to book the revenue. Because if you know the definition of revenue, it says that the first 5 points, yes, according to IFRS, the entity should account for revenue only from the contract with the customers. So what's the contract? The contract needs to be approved, the goods and services to be identified, payment terms should be clear, and it is probable that Baba, I will collect it. If I will not be able to collect it, if I'll be probable to get the collection, if I'm not in the position to collect that money, it's okay, you don't record it, right? Yes. At the day one, at the inception of the contract, what I was feeling it, at the day one, the things were very well. He was paying me clearly. At the date of inception agreement, Kiki and Color entered into a contract. A contract was there for sure with the specific payment terms and conditions. Moreover, my color company and my Samne wala company was also good. He was having a good credit rating and everything was satisfied initially. But later on, there was a problem. So IFRS 15 says that the revenue from the usage of the royalty should be recognized as per usage. How much you are using it, how much you are using taking the characters, as much time you have to give me the payments. As much comics you are making it, you have to give. It was very simple. But later on, where the condition was very bad, yeah, then it is a problem, isn't it? Yeah. So when the contract with the customer meets the above criteria, only then we have to book it. But at times when it is not being matched, when the contract with the customer meets the above criteria, it is only assessed. But if there is significant changes, then it's a problem. For example, in the year, in 2027, in July, my color, the next party, has lost major customers and finances. It was a problem. As such, it was no longer probable for my company to collect. Means I am not in the position to collect. So it's better do not book for further revenue. Exactly. Unnecessarily income you cannot book it. Agreed? Yes? Simple? Very simple. So you have to satisfy the criteria of recognition, like when can I recognize, what is the position. Only then I'll be at a comfortable position to record it. Otherwise I will not record it as an income. Clear? Yes? Okay. Up next we have the last question. Over here, if you can see, yeah, the last question, which they have booked it for 11 marks. So yeah, this is very easy, but again, the way to write the answer is important. Discuss the impact that the property accounting policy made by the investors. Analysis of the Kiki's financial statements has been done, and you have to refer as per the key ratios. So over here now, I have to understand like what is the accounting policy about the property. See, property can be like of 2-3 types. Like, okay, it can be the property which you are using it for your business purpose, or which you are constructing it, or maybe you are like say investing just for the purpose of earning rentals and capital appreciation. That you have to book as per IS 40. So what they have written, as a result of rising the property's price, my company purchased 5 buildings, okay, which I should not use in my business, but I should use just for getting rentals, okay, during the current period, in order to benefit from the further capital appreciation. Yeah, so they know maybe if the value increases in the market, I'll get the benefits. So for that they have purchased the properties. Yeah, so my company never owned, yeah, Kiki company has never owned an investment property before. Okay, for them it's the first time. In accordance with IS 40, the directors are aware. Oh, the directors are aware. Wow, what are they aware? We know when it is IS 40, it is an option. You can either book it as per how? I can either book it as per, let's say, the cost model, or maybe the fair value. But if you are booking as per cost, it should go cost. If it's fair value. Any changes directly to P&L account and not to OCI. Yes. Okay. So this is a question. So Kiki has never owned an investment property before. In accordance with IS 40, the directors are aware that they can measure the building either at a fair value or cost model. Okay, it's great. At least they know that. Okay. Yeah, they know the option that they can either measure at a fair value or cost. Cool. However, they are very much concerned about the impact that the choice will have been made on the analysis and the financial. Okay, so we have to see if I'm making up any choice, what it will impact on the balance sheet, that is the financial performance, position and the cash flow of the current and the potential investors. So what can that impact? If you chose the wrong thing, what will it impact? Yeah, for the first, you have to write the definition of what is IS 40. So do you remember what was IS 40? I told you, yeah, it becomes important, but not so well, because it might come, but it's not something which obviously comes. So what's IS 40? Today, if I have some extra money and I thought of, let's say, investing in some property with the intention to get only the rentals and capital appreciation, I can book that. But if you remember more, cost or fair value. So can you tell me one more thing? If you are having any sort of gains, if you book as per the fair value, it needs to go where? It needs to go directly into your P&L account. But I cannot charge depreciation as such. Over here it's written, if you remember. Yeah, seriously, you have to know that. As per investment property, as per IS 40, investment properties over here means the building which I should measure at cost. Normally, if cost is there, I can record whatever the depreciation and impairment loss it is. But if you choose to record at fair value, it needs to be fair valued. Any gains and losses must be charged to P&L account. No depreciation is charged. Now, what we will be showing in the P&L, in the statement of financial position, what will be there in the balance sheet? What will be there in the balance sheet? What are you going to show? If I'm talking to you about the financial position, students, assuming that the prices rises, and if you're choosing the fair value model, what will happen? You have to increase it, right? You have to increase your assets. If you increase your assets, what happened? Yeah, what happened? If I increase the assets, the reported assets on the statement, I have to book the changes. Changes will go where? In your P&L account and not in your OCI for sure. But for example, if I use the cost model, I can depreciate it and reduce my carrying amount. Okay, this can be done. This means that the fair value model may make kiki. Okay, if I'm using, let's say, fair value, for example, then what will it impact? If I'm using fair value and if the asset is increasing, my assets will look more because I have the revaluation concept, which can directly impact in the P&L account. Yes. If I use a fair value model, my asset will be more for sure. Some stakeholders, considering the stakeholder, and the stakeholder will think, they're having so good assets. Yeah, the assets are very better. Maybe that. Maybe potential investors will feel, oh wow, they are having a huge amount of assets. Maybe that could be the impact. So some stakeholders may place importance on the entity's asset base. They feel, yeah, the assets are more for them, the securities. However, reporting higher assets can sometimes be very negative. For example, yeah, if it's asset turnover ratio, maybe it can deteriorate. Yeah. For example, if the asset increases, then the equity also increases. As such, the fair value model may lead to report more optimistic like gearing ratios. Okay, this will reduce the perception of risks. Okay, so if I'm talking to you about the gearing ratio, there is some asset and equity settle things we have to record it, equity and debt ratios. So if I feel I'm having more assets, okay, maybe depreciation is not actually so much there, for example, over here. So that can eventually have a negative impact if it's asset turnover ratio. Yeah. So if it's having a huge negative impact, that can also deteriorate at some point of time. Yeah, but at times it can help to take up the risk by making more investments. See, it's all dependent upon how you want to record this. Okay, it's all dependent upon how you want to go ahead with it. And if it's the P&L account, how will I consider it? Yeah. In the statement of P&L account, in times of rising prices, if the prices increases, yeah, try to understand it. Okay, if the prices increases, the use of the fair value model will lead to gains. Sure. If the prices increases, I'll be having more gains reported in your P&L account. This will result in your profits to increase. In the context of that, if I don't use the fair value model, then I get an opportunity to put the depreciation in your P&L account. Yes. Therefore, if you're considering the overall value, your EPS will be changed. Why? Because if you're having gains, your per share, why? Because they have just figured it out with the ratios. And we have the ratio analysis with us. Yeah, the chapter we have, which I have taken care of. So ratio analysis means we need to analyze, not just with the percentage, with the interpretation. So what they have written, if the EPS increases, that means over here, the EPS, the stock market value and all is going to increase it if I'm using fair value. But it is reverse, vice versa if I take cost. Because if the cost, your profits will be less. So yeah, it can impact your investor's mind also. However, it should be noted that the fair value are volatile. In the current year, it's always not that, the fair value is always gain, gain, gain. If the fair value of the asset is reduced, things can be turned around also. For example, if the property price decrease, it will result into loss and many people will feel like, ma'am, it's not good. It's not good. The impact, the perspective of the investors and the stakeholders will be changed. Yes. So we have to consider all the stuffs and then take a proper decision. Where do I want to go ahead with? Considering this cash flow statements also, we have to consider that if it's a cash flow statement, accounting policies have no impact on operating cash flow. So whatever you do, cash flow means cash flow. If it's coming, if it's going, you have to record that way only. And last but not the least, if it's a financial statements, you have to present properly. Disclosures you have to keep. And yes, students, in the disclosures, I have to clearly mention, like what type of the investment property is it? Is it something which I have required, and if I have mentioned it in the fair value basis, or I have presented it because it's RMPD, yeah, recognize it, okay. What value I have measured? Is it cost or is it fair value? Again, I have to properly give a disclosure. Which method I have followed it. So yeah, a suitable thing we have to record that is it at the cost model or at the fair value. So the peoples can draw a comparison better. Yes, clear? So these way, students, we have completed the first paper, and yeah, I hope you guys would have understood it very, 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 very well. Like I tried to complete it lesser than 4 hours. So yeah, is it clear? Is it clear? Oh my god, yeah. Yeah, Sukanya ma'am. Is it clear? Yeah. I am so super happy after completing like one paper. Yeah, tomorrow we'll be doing ahead. I know, obviously, with the second paper also. Yeah, that is something which we have to go ahead with the second paper, like the second mocks. Yeah. I really feel that whosoever is, maybe not today, yeah, for sure, whosoever may be watching this, the paper, maybe feeling something better, like maybe feeling some confidence after watching this. Yeah, there are certain concepts which are again some different or maybe difficult, then it's okay. I tried explaining it, and yeah, in the paper like 100% it's things, so definitely you will not be knowing it. But I would want, at least we need to be at a position where we are at least at a situation where we can at least write. So I always tell my students that whatever standard comes, yeah, even if it is a small standard, please don't ignore it, because a lot of theory is expected from you all. If you know the concepts, you can at your own language also write it. So yeah, with the perfect terminologies, obviously that cannot be something which I want to write it on my own. So yeah, that is very fine, and I hope you understood it. Yeah. So yeah, thank you Sukanya ma'am for being with me till here, and yeah, thank you for students also who are going to join it and maybe see it. And I don't know who is there, but yeah, thank you for understanding the concepts. Yeah, I tried to explain to the best with a very, very, very limited time. Otherwise, it usually takes like 6 hours for me to explain. Yeah. So you can just see with 4 hours I was explaining, and I was not even writing, I was just pasting it. So it will be very difficult for everyone to write the paper and complete it within 3 hours. So please, please, please have your speed in writing, so that you'll get good marks. Yeah, thank you so much. Thank you so much. Thank you so much. Yeah, if you have any doubts, definitely I'm there only. Yeah, we have the Instagram ID, I have my Telegram too, and yeah, obviously the chats are always open. Yeah, maybe live chat will be getting it over, but then yeah, we are free to even message in the chat. I'll be having an eye on that. Yeah, thank you for being such a better, the beautiful student. Yeah, I can say that way. Thank you so much, Sugana. Thank you so much, other students also. Yeah, thank you. Bye bye. Yeah, tomorrow we'll be having another mock papers. So yeah, we'll be going ahead with that. Thank you.